What's up, crew? Sorry it took me a few minutes. We were getting some stuff handled. How we doing? How we doing? Happy Tuesday. One second. Let me get my screen up here. Bing bop. What a day. What a back and forth day, but at least it's in a big range. What's up, Tommy? What's up, Brent? Cameron? How we all doing? Pro Fast. Shout out to the crew. Get this posted on X. All right. Let's close up spaces. All right. My algo did get 1,600 last night. Woke up to my eval halfway done. I shorted last night. Where's the sessions? Aha. Here we go. Yeah, Tommy, I played a little last night. We had, where were we? Gosh, I just lost. Hello. Aha. Right when Asia session opened up, we had this breakaway gap set up that I played. Little breakaway gap, little 15-minute fair value. Entry was on the tap in, risking consequent encroachment of the 15-minute breakaway gap, targeting these lows. That was nice. So we caught the Asia move. I didn't play any long in London because I was asleep. And then, what is it? Finally fucked around and caught a short after the pump this morning. Still didn't get the midnight open that I wanted, but extremely close. So it is what it is. Trying to max out my funded futures now. Let's go. I wasn't here yesterday, but I took the long at the test of low day, 730 for 3K on the combine. Let's go. Where's the music? I need my own music too. I was targeting midnight too. Yeah, we didn't get it, but here's the thing. When your entry is 250 points from midnight open, it's not required when you have other levels to work with. When you have 8:30 open to work with, you have sell side liquidity here from this morning. We took sell side, tapped in that 4-hour PD array. Look at tapped into 4-hour after sweeping previous 4-hour low. That was sell side liquidity. What do we do? Inversion. Change in the state of delivery. I didn't take this personally because I made my money for the day already, but this is another beautiful play. If you saw it. Inversion. On the inversion, you created a breakaway gap as well. Breakaway gap. Beautiful. Standard deviation. Hit -2 on standard deviation. Beautiful. So that was sexy. I don't know if you took that, Tommy. That was a beautiful little forever model, though, in the 4-hour fair value gap we had. Baby, the baddest girl. Trump's going to be speaking at 2 p.m. We'll watch that. You did catch it. Good. Yeah, that was beautiful. That was a perfect play. Even if you just took it to these highs, like even if you just played to these highs here, that's still... Did we have SMT? I don't even know if we had SMT. We probably did of some sort. I don't know. It doesn't matter. You don't need it. You don't need SMT. All you need is momentum and order flow. There was not a high time frame SMT that I saw. You don't need it. But it's always nicer. But look at risk to reward on this. Let's say your entry is at inversion. Even if you risk below this candle that's to this high, beautiful, but you could have really risked below the breakaway gap because you should not go below that breakaway gap. Even if you weren't targeting all the way up here, just to here is a 5R trade. That would have been a 10R trade. Right now, rebalance the equilibrium. What is that? 8:30 open is like the same level. Staying under this order block right now. What is a breakaway gap? Breakaway gap is a fair value gap that we don't expect to be traded into. So something I played today was like this breakaway gap setup. It's when you have two stacked fair value gaps. What do? Which one do you use, right? Well, we have consolidation. We had manipulation of these highs, right? And we have displacement of two fair value gaps making a low from this, right? So we're taking out this low, market structure shift below that low. So what I'm looking at here is after I'm seeing this move, I know that we shouldn't trade back into here. We just swept buy side liquidity. We just swept highs. We should not have to trade back into here. So this becomes my breakaway gap. This becomes the fair value gap that I want to take an entry on. Entry goes there. Stop goes below or above, above consequence encroachment of the breakaway gap. The rules for the breakaway gap are you can trade into, but you should not close in. You should not trade above consequence encroachment. A wick is okay. A wick in here is okay, but I should see an instant reaction to go lower. Or we shouldn't even tap in there at all, right? And that's what we did. Targeting sell side liquidity. You could have even targeted down there. And that's a beautiful trade. That's a almost 4 hour trade to those lows using the breakaway gap. Another one from last night that I did. This right here. This is last night in Asia session. Consolidation. We had internal manipulation. So we didn't take out these external highs, but we did respect this 15-minute fair value gap and was able to get the same model where we have breakaway gap. We have fair value gap. Entry becomes at the fair value gap, risking consequence encroachment. So this is your risk here. 40 points, 42 points of risk to this low. And that's what we traded last night. MTL, what's good? Good afternoon. He said, what's good, my mogger? Haircut today. We're going to get extra mog. Extra mog, baby. I hope that makes sense with the breakaway gap. If it doesn't, I can make a video that's a little more in-depth. But that's essentially how it goes when you have two stacked fair value gaps. Now, it needs to be used in context, of course. Not every series of stacked fair value gaps is going to act just like that. It needs to be in context like we had here, right? What was the context? Well, the context was we just swept external buy side. This is that blue line. We just swept external buy side. We had internal manipulation here, right? That's internal manipulation that we have. And then we see what we need. We have consolidation after taking out those highs, consolidation, two stacked fair value gaps. It's all used in context, right? It's not just random stack of fair value gaps. Because, right, if you tried to do that here, right? If you tried to do that here, that didn't work. Right? That didn't work here. Why didn't that work? It's not random that this didn't work here. Why didn't this work? Because the context makes no sense. We just swept buy side externally on a bigger time frame internally here, and we're creating a sell side model to take out these lows. Right? So this working out, it just makes no sense. And that's why you can sit here and know that this is not one of those setups, right? I'm Mr. Charisma, fucking Pablo Escobar. In the car. XYZ getting rocked. What's up, Ghosty? Ghosty. What news hit this? God damn. Oh, haircut gonna give Jordan the ascension, bro. I let it go so long, but it's because I want I'm gonna do probably like a 90s mod cut, so I wanted to let it get a little long, you know. Maybe a little bit shorter than that, slightly, but we'll see. I feel like I'm hiding with all this hair now. I feel like I'm hiding. I don't want to hide. Should I throw an Uno reverse card out there? It's my Uno reverse card here. Dracula. When mustache? Oh, I used to run it like faintly. It's just blonde. Like you can't even see it. That's the problem. Even when it grows in, it's just blonde. Like I'd have to dye it. Get the Tom Welling cut. Yeah, you know. Exactly. I don't know. I've come to terms to realize that I don't really belong with facial hair. I drop years in age when I shave every time. Like you guys could probably go on my Ace the Kid TA TikTok, on my trading TikTok, and find videos of me from like a year ago. I look 3 years older. It's wild. It's because I had all my facial hair grown out. Well, not grown out, but slightly. I can't really grow it out. I need a new song. Here we go. Ladies and gents, I don't have much thought on where this market can go right now. We are chopping in this bigger time frame range here. So I don't have much to think here right now. Jordan looks maxing. Always. I mean, you have no choice in 2025 but to do so, you know? Send up the mink signal. Send this thing down. I mean, let's see. What do you have going for you? I mean, we're just in such a tough. It's just back and forth. We're like, okay, we're disrespecting bullish PD arrays, and then it's like, oh, we're reclaiming it, and then it's like we're disrespecting bullish PD arrays again, and now it's like, oh, we're reclaiming it. Are we gonna respect this? Can we? Not really. I don't have any confidence in either way here. I guess the only thing we could do is be on the bigger time frame and say things are still bullish because we're respecting bullish PD arrays, bullish order blocks, right? You have a big bullish order block here. I'll mark it green so you can see it a bit better. Bullish order block there. On the bigger time frame, there is still reason to trade higher given the reactions we're seeing, right? Reaction here off this order block. So until that changes, Higher time frame, I got to think we continue to trade a bit higher here, but I won't mind if we try and come in. I think this internal low that we have is going to become a draw for the market at some point. So this gets deleted. Nope, 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 nope. This, no. This gets deleted. This gets deleted. This is our new sell side liquidity. Bing bop. Boom boom pow. All right. First low made in a fair value gap. Always becomes a potential draw on liquidity. And so going into tomorrow, I'll be looking for those lows to potentially come into play. Are we seeing prime Jordan in 2026? You know, we're going to try. We're going to try. I just got some Milano tan too, so probably. Although I have to wait because I'm going to Puerto Rico on the 10th. And so I'm just waiting. I just got a new round of stuff, so I'm waiting till after to start taking it. That's going to be baller, though. You guys are going to see me go from pasty white to extremely tan very quick. It's going to be a move. Bros. Oh, you're too funny. Oh, it's needed. I've been on the GHK BPC. That's been fire. Now it's time to mix in a little Milano tan too. Get fun with it. You know, then we'll move to some IGF-1. You know, we'll get there. We'll get there. I still haven't made any options trades on my Vanquish account yet. Vanquish is a sexy platform, though. The platform that they use, DX Trade, I like it. I don't know if you guys have tried it yet, but I like it. It looks good. What does a GHK do? It's copper, elastin for your skin, hair, nails. Collagen production. Tightens up the skin, you know. Melanin maxing. I was actually looking to buy some puts on this account earlier when I was looking short, but I kind of, to be honest, forgot because I was so focused on my other trade. You ever seen Clav before? Of course. Of course. I think he's great. You gotta love him. Like you can say, like, people can say whatever they want. At the end of the day, he proved his point with himself. He didn't absolutely blow up until he ascended. He proved his own point with himself. He's hilarious though. Gosh. Yeah, that's a little wild. I watched the video. I watched the video. He does that for a little more of a shock factor, but I saw that. Bone smashing is sad though. Yeah, fucking it hurts too. And you can really screw yourself up doing that. I don't recommend. Dude, when Clav double draw? It's gonna go crazy. Market's trying to come in. This is just ranging, guys, so we're just, you know, talking around, having fun. But guys, it's tough price action out there. Be very careful. Even this morning, even though we didn't have, you know, straight direction in one way, there was still efficiency in price action, right? Look at the way price was moving here and here versus right now. Right now, we're just stuck right here. So, got to be very careful. Higher time frame ranging, not doing much. How do you delete these? Was grabbing something to eat. What did I miss? Not much. A range. You didn't miss much. Of course, you guys could probably be scalping here and there, but it's just, I mean, is that high probable in this environment? Probably not. So it's a tough rest of the day. We got, what is it? Take a look at some individuals. Tesla couldn't get any legs today, really. AMD's down 2% now. Damn. Not really any big movers on the watch list. What's UNH been doing? Dead. Hey, Walmart's still green. We got to mog it out of the range. Yes, we do. You think if I just mog NQ hard enough, it'll just start moving out of the range? This is no longer usable. Hello? There we go. Gold's slowly making this comeback. BEX had legs this morning. What is this? Trader 2x long. I've never seen this. But hey, you know I love my 2x leverage tickers. Wow. Wow. Okay. Nice.
What's up, Jordan?
What's up, Evan? Let me change the volume so I can actually hear you. Hold on.
I do also see Obi there.
There you go. I can hear you.
Let me bring him up.
Where?
Hello, hello. What's up, Mr. Obi? How you doing, sir?
Hello, hello.
What's
we
up?
got
What's
you.
up?
We got you. You can hear us, right?
Yeah, loud and clear.
Perfect. I am very excited to have you on here, Michael. I know I've only known to call you Obi, so I was like, oh, I'd be embarrassed to say I didn't know that was your first name, but I know you. We've met a couple times in person. You're doing some good stuff over at the Robinhood team, and obviously we're on the Wolf trading spaces. So this is a lot of traders coming in here talking every single day. What do you do over at Robinhood? We appreciate you hanging out with us here.
Yeah, head of education at Robinhood. Been here for 5 years. Before that, at a couple other firms you might have heard of, TD Ameritrade and Thinkorswim. But it's been almost 20 years now in the retail brokerage industry. So, but yeah, last 5 at Robinhood.
What area do you think do you spend the most time educating people in? Is it are you an options guy? I've seen in some other areas we like futures, single stocks maybe. What are the areas that get you excited?
Yeah, primarily derivatives. So, heavy into options education. With Robinhood launching futures last year, starting to getting more into the futures education side. About 15 years ago, I spent 2 years on an overnight futures desk. So, a lot of my experience is in the options and futures space. And then, event contracts is starting to get on everyone's radar. So we're thinking about ways how we can embed some education into the customer experience for those as well.
I appreciate that. I know we got Jordan up here. He's trading every single day.
Yeah, we're just kicking back right now. No trades right now.
What parts of the market do you normally play in? And I'd be curious on why. I know we futures guy, right? But I'd be curious on why.
Yeah, I primarily, if I'm personally trading, I'm looking at the S&P futures, so the E-minis. Gold has obviously been pretty volatile recently, so that's been some good trading. And then oil is probably the third one that I look at, and that one's been a little bit of a snoozer recently, although I think we might start seeing some vol come back into the oil markets. When I'm on the options side, it's probably the tickers you're all familiar with. The top 10 in the S&P 500 are usually on my watch list. I tend to stick towards liquid names, ones that I'm more familiar with, as opposed to trading some of the, kind of smaller cap stocks or stocks that might kind of catch more of the chat room crowd, so to speak. But yeah, that's like the trading bucket for me, and then the investing bucket. I'm kind of an old school, just passive investor in like my retirement accounts, and I will use options and futures as defensive and hedging tools to manage risk when I think we're in a prolonged market downturn or correction. So I use derivatives both on the speculation side as well as the hedging side.
I'm curious. I don't know if you can see Jordan's chart here. I'm sure you've seen a lot of different stuff. Some charts have a lot on it. Some charts don't have much. I'm curious if what's on your chart here. What is your first thoughts looking at his? I know he's big on the sessions, New York high, Asia high. I'm seeing on here.
Yeah, today's a good example. Today's a good example on the S&Ps where the London Open kind of held the bottom, and then right around London close is when we turned around in the U.S. markets. I actually have a pretty busy chart, and let me
feel free to screen share it. I can throw it up for you if you want to share. I'd love to see it.
Give me a sec. I'm gonna.
No worries.
Do you guys want me to join? Because we have my feed coming in through our control room here. You can cut over to my chart manually, and you'll lose my camera feed, or I can join the restream from this computer in here and just share my screen. What's best for you guys?
Maybe just join it from your other computer. Do you need the link, or do you?
Yeah, give me a sec. I have it. Just let me log in.
No worries.
And are we live right now? Or are we just kind of?
Yeah, we're live.
We are live. Maybe I'm sorry. I maybe should have said that first. I apologize.
Everyone.
No worries. We're pretty free flowing and just hanging out, especially during this time when the market's a little bit slower. But it's been a fun day with the range, even though we've been going a little more back and forth. You mentioned oil too, which oil I've always had a hard time trading out, trade it much, but just kind of always in that consolidation on the higher time frame makes it tough for me to be able to trade it. So
yeah, it's one of the things I learned, especially in the futures markets, is the equity indices are actually are tough to trade. There's a lot of variables and things that can impact, the tape on an equity index, where a commodity like oil, gold, there's less variables that can sort of push the market around on an intraday basis. So a lot of the old school futures trading techniques tend to work better on commodity markets as opposed to the equity indices. However, I've looked at the S&P chart for pretty much my whole career, so I tend to have a feel for certain patterns and movements. Doesn't mean I'm a great trader by any means, but just being in the industry, my day job working on the brokerage side of the business, you tend to look at stocks more than you do the commodities. But a lot of the old school trader techniques are derived from those old commodity pits.
Gotcha.
They don't necessarily carry over sometimes to the stock market indices. Here, let me log in and get my screen going.
No worries. All good. Evan, you see this core we've bounced past few days has been.
I won't lie, CoreWeave is not one that gets on my radar too much.
I just noticed it the other day because of the drop it had recently, and then it reclaimed a lot of that nasty.
I've also I enjoy watching these 2x single stock ETFs. Obviously, we're talking about there, and CoreWeave, just volume wise, it does have pretty good traction just compared to some of the other ones. So that and like a Circle are names that I've seen. I'm not saying I'm buying these stocks, but
Circle's been a crazy one.
Circle's been a very active trader, and I know it's back to the IPO price as well, so it's interesting.
It is. Dropped slightly under. That looked like a buy so far, though. I don't know how.
Old Cameron saying Eli Lilly is looking weak. Although I know while the whole market was pulling back a little bit, the J&Js, the Eli Lillys were holding pretty well. So
yeah, I mean, down 5% from the dip. Dip a lot more. Gosh. Eli Lilly's kind of gone. She's not with us anymore.
We got double OB now.
Yeah, let me Let me shut off
Oh,
camera.
it's funny because it's on the sign, which is cool, is on the other side. A little mirror action.
There we go. All right, got your chart up there now. Beautiful.
Well, these are the S&P futures today. I heard you mention we're kind of swinging in a range. A little bit about my trading style. I kind of have adapted a style from a legendary futures trader. His name's Mark Fisher. Used to trade in the New York pits. Is considered one of the kind of biggest futures traders over the last 30, 40 years. We actually had him at Hood Summit in Miami, which I think you were at, Evan. And the style of trading that he's built is essentially a combination of opening range plus pivot points. And that's kind of what you're seeing on the screen here is I use a 20-minute opening range for futures. In today's day and age, some people might tighten that up to a 5-minute opening range or even somewhere as tight as a 30-second opening range, depending on your trading style. And then based off of the opening range, through some calculations using kind of the average true range over the last 10 and 20 days, you create these pivot points. You have kind of one above the opening range, and if you can see this blue line right here, within the lower part of the chart, and that kind of gives you your sort of first area where you might expect the market to hit, retrace, or break out of. Opening range breakout traders that are just purely using the opening range, they tend to get long right above the opening range or short right below it.
Yeah.
A lot of times you can get whipsawed like that.
Exactly. Yeah, I see it all the time.
Yeah. So the kind of adding in the pivot point to this, it gives you this sort of extra confirmation where you break out of the opening range, trade above that first pivot point or trade below it. That would sort of give you your bias for the day. So in this case, this is a weird day. I will say it's not a perfect.
This is not an easy day to trade at all, but we made it work a little bit this morning. We caught a nice move to the downside, but I think no matter which way you were looking today, it's a bit of a tougher trade today.
Yeah, I was trading a little bit today. I was up and then I gave it back. But here's a good example of sort of the approach that you might use with this type of trading style is out of the opening range, we fail to break out. We trade down to this first pivot point. Now, these other two areas that you see, this blue shaded box and this yellow shaded box, these are the 1 and 3 day pivot ranges. And these are essentially calculated looking at the last yesterday's high, low, and close, as well as the high, low, and close of the last 3 trading days. And what they do is they kind of create an area where the market will tend to get long above or short below. And you can see when we, let's try to get a nice tight view here. You can see when you get into kind of a trending market, like when we hit the lows last week at 65.25, we traded above these, just focus on the yellow and blue. These are the 1 and 3 day pivot ranges. Once you get above those, they tend to sort of create this sort of staircase look to the market where traders will, when price is above these ranges, they'll buy into that weakness and put a stop below these ranges. And ideally, as the market's moving up, they can just drag their stop up below this 3 day pivot range. This would have been a great example of like a good 5-6 day swing trade if you're trading a longer duration there, using the pivot ranges only as like an entry and potential exit. But when we get sideways action, which is what we started seeing going back to last week, these pivot ranges both condense and almost start mirroring each other. And in markets, generally, you have moments of volatility where markets are moving, and you have moments of chop where they're consolidating. We are currently, and this is why I think we're seeing some of this action today in lieu of sort of, there's not a lot of news coming out, like we're sort of post earnings. The Fed decision is all but a foregone conclusion, it seems like. And we're getting into that area of the year where markets are just going to kind of chop around and figure out what they're going to do. And so you're getting this consolidation on the 1 and 3 day pivot range today, which just to say, like, the market's got a little bit of support here at the bottom of the tape today. And despite seeing a potential break to the downside, it was held by the 3-day pivot range, and now we're just sort of sitting in this chop, which it's a tough day to trade because you're getting these 10, 20, 30 point ranges on a 10-minute. I use a 10-minute chart, and then you're just getting whipsawed back and forth. So it's one of those days you got to be very nimble and pick and choose your spots, which I think the 10 o'clock central failure of this pivot point was probably the best trade of the day. Get short off of failing to break above this pivot point.
Yeah.
And you got a good, what was that, 68.63 all the way down to 68.20.
There's a wide range to capitalize on there for sure. Yeah,
Hey, Gav.
Yeah, what's up, Gav? We got Gavin Camp joining.
Hey guys,
What's up?
Excited to see Obi in here early. I was jumping in for the 2 p.m. Eastern kickoff here, but this is exciting. I'm loving the education that we're already getting. I know we have so many more people, it feels like, Obi, have started trading futures over the last 2 years probably than ever before. Probably more people than ever in history. And so I know that this is a huge passion for you, and obviously you're showing it off on screen here. So I think people are excited to learn because so many of them are taking these evaluations, right, doing the prop firm type stuff, and so they're all just like grasping for knowledge on how to be successful in this area.
Yeah, it's something that I've seen over the last 5 years where post COVID, a lot of new market participants coming in, they discovered options, and they started building trading strategies that, frankly, as I was watching, because we meet a lot of customers, we do a lot of customer research, we see how customers trade. And before we launched futures, I saw a lot of activity on the option side of our business that essentially, with the birth of 0-day options, people were trading 0-day options like a futures trader would trade futures. And I used to say, like, you're a futures trader, you just don't know it yet. And when you ask them, like, what do you like about 0-day options? And they give you sort of all the things like, I like the leverage, I like the in and out, I like sort of the hyper short moves. I don't want to deal with all the BS around, holding an option for 30 days and time decay and all the Greeks. It's like, I just want that directional move for a short amount of time. But you still have to deal with the pattern day trading rule. You still have to deal with, even in the hyper short term, like, dealing with time decay. Futures is a much more directional way to day trade. And you don't have the pattern day trading rule. You get the leverage. So all of the things that day traders looking for, that's, if you're going to speculate, especially on something like the S&P 500 or NASDAQ, I always say, like, give futures a try, because you'll find that the liquidity is great. The movements are 1-to-1. There's no sort of question of, what's my options delta versus the move of the underlying, and why didn't I get a profit, even though all that sort of goes out the window when you go to futures. The flip side of that, of course, is futures are risky. Like, the leverage in there is pretty big. And so I think that's what throws new futures traders off, is the leverage, the movement, but also the structure of futures, understanding tick size and tick value and contract specs. Once you get over that initial learning curve, I always say, like, that's the easy part of futures. Trading futures is easy. It's a buy and sell button, but becoming a successful futures trader, that will take you a lifetime. And that's the hardest part of trading futures, is being profitable day in and day out, managing your risk, not being an emotional trader. Like, there are professional floor traders that have gone to the screen and they've been trading for decades, and they're still fighting the fight of trying to be a good trader day in and day out. That is the hard part of trading futures. Everything else is pretty simple once you kind of know the basics of it.
I love it. Obviously, you have ES up on the screen here. Do you trade any of the metals, gold, silver, others there? What's kind of in the repertoire for you?
Yeah, we were saying that, the big three, I think, for everyone, including myself, is equity indices. For me, that's the S&P, gold, and oil. Those are kind of the big three at any retail brokerage firm that you're going to see traders look at. Specifically at Robinhood too, we offer the crypto futures, and because of the size, you see a lot of people trading like micro ETH and micro Bitcoin. I've dabbled in some of the crypto futures. I will say the liquidity is a little thinner on those than you will get on oil and gold. But yeah, gold is one I've been looking at a lot recently. I haven't traded it in a couple weeks. You could tell because my chart isn't as marked up. But This is one, when we saw that move up to 40, let's go back. This was, we'll go back to tighten this up for you guys. When we got that move up to 4,400, I think everyone was sort of piling into this trade. And since then, we've had a lot of great volatility in gold with a little bit of consolidation down around 4,000 to 3,900. But 3,900 held. And since then, we've been moving up. Now we're back at 42.25, coming off of 4,300. I don't have my opening range and pivot points marked up on gold. But yeah, this is one. And this is important if you're a new futures trader, is understanding the sizing so you can appropriately pick the right contract for both your account size, your risk tolerance, your understanding. If you trade one of the big gold futures, this is 100 ounces of gold per contract on a contract that has essentially dime wide ticks, meaning every price increment is going to go from 42, 24, 30 cents to 40 cents to 50 cents on a 100-ounce multiplier. That's $10 a tick. You get a full one handle move on gold. That's $100. You can get a 10-point move in gold, especially now in seconds. That's $1,000 that you might gain or lose. For a small account, that might be too much heat for someone to take. And so the CME group has done a really good job of putting out these smaller contracts. You have MGC, which is the micro gold. That's 1/10 the size of the big guy. So that essentially is a tick value of $1. So it's 10 ounces versus 100. And then the new one, which I think a lot of futures traders, especially smaller ones, have been gravitating towards, is the 1 ounce gold. So 1 ounce per contract, very much trades, has a different tick structure in terms of quarters versus dimes. And this is one of the things that new futures traders, I always say, like, the math isn't hard on futures. It's cashier math. So if you ever worked as a cashier at a grocery store or somewhere, if you can make change for a $20 bill in your head, you can be a futures trader. And what I mean by that is, when we trade stocks, like let's just bring up, we'll just bring up Nvidia. And if you look at the ladder, right, the minimum tick increment of a stock is essentially a penny. Like, we're all familiar with that. Not hard to understand. The price goes from 181.11 to 181.12, 13, 14, 15. And the size of your position is determined by how many shares you're long or short. You can be long 1 share, 10 shares, 100 shares. That's essentially your position delta. When you move into the futures market, everything's different. Everything's different because every futures contract sort of has its own set of specifications. And you can see that on the Robinhood Legend platform here by adding the snapshot widget to your screen. So you can see snapshot here. I already have it on my screen. It's in my upper left-hand corner. You get the title of the contract, the bid ask, today's high-low range, pricing. This is all sort of basic, what the contract's been doing today. But then when you go to the contract specs, this is where you're going to get the margin requirement, how much it's going to cost you to trade, the leverage, the multiplier, the tick size, the tick value. So if we're trading the S&P mini futures contract, the big guy, every quarter move in the index is going to be a $12.50 gain or loss for us because the multiplier is $50. So understanding these sort of basics of contract specifications is like the first step in becoming a futures trader. And it's surprising. It can take some people a while to adapt to that because every contract is different. The futures industry has done us no great service in this, but there's some interesting history on why that's the case. So if you like reading about the old school days of trading back in the 1800s and the 1900s, there's some really cool history behind all that.
Unless anybody else wants to jump in with a question. I did have a question real quick, just because our audience is kind of steadily growing as we've been on here, and we've got a couple of questions on trades and pieces like that. But just kind of, what do you think is like the best piece of advice that you would give to somebody that is fresh to futures, starting out, really just trying to get their feet there?
Number one, walk into the futures market with a tremendous amount of respect for risk management. Like, first and foremost, I think the biggest mistake retail traders make is they think in terms of how much can I make? And you can make a lot of money in futures. You can lose a lot of money in futures. And so whatever you do, you have to walk in with a healthy respect that at any moment, this market could wipe me out, in a sense. Like, you just have to have that approach. Not saying that that's going to happen, but if you walk in sort of with the arrogance, like, well, I traded stocks, I made money. I traded some options, I made money. Now I want to try futures. There's a lot of things that carry over, and there's a lot of things that don't carry over. And so understanding the risk management side of futures is number one. Number two, you have to sort of pick a lane. And you don't want to boil the ocean. If you're a new futures trader, pick one market, get familiar with it. And I always say, like, if you don't want to do like paper simulated trading, which I always advocate for. It's something internally I've advocated for here, that I would love to see Robinhood build a trade simulator. So whatever you guys can do to help my cause, next time you're at an event, I think we would all love to see a simulated environment. But in lieu of that, start with the smallest contract. So if we're going to learn how to trade S&P futures, you probably don't want to jump right into the E-minis. This is a big contract. To give you a sense of how big the /ES contract is, you take the price of the current future. Right now it's trading at 68.40, and you multiply that times the multiplier. Now, there's no shares of the S&P 500. It doesn't work like that, but it's a good analogy. Buying one or selling one S&P E-mini future would be the equivalent of buying 50 shares of this thing if they existed. So 68.40 times 50, we have a notional risk of $342,000. All right, that's a lot. Like, think about $342,000 of a SPY position. How many shares of SPY would that have to be? It'd be about like 500 shares, right? So you have to sort of gauge the size of this thing. And I think that's the first thing that catches new futures traders, is just sort of how big this position is, and where does that leverage come in? Well, we're controlling $340,000 of notional risk, but the only requirement we have to put up to get into that contract is the margin requirement. And that's sort of the second thing new futures traders have to understand is you're not paying for anything. You're not collecting any money. You're getting into a contract that requires you to put up a margin requirement. And in the case of the E-mini, that's about $25,000. And so we're getting about 14-to-1 leverage on our money with futures. That's a lot of leverage. Compare that to the MES, the micro E-mini, which I think I saw being traded earlier. This is 1/10 the size of the ES, where instead of $24,000 in margin, it's $2,400. Instead of a tick value of $12.50, it's $1.25. And so, a 10-point move on this is going to make or lose us $50, where a 10-point move on the ES is $500. Once again, dial that in based on your account size and how much your risk tolerance is, and you can start figuring out like what's the appropriate contract and size to trade. And then once again, getting familiar with the contract, the specifications, when it trades, when is the busy time, when is the slow time. It's pretty simple when we look at a stock index, but if we're trading gold or oil or silver or a currency, you really want to become familiar with that contract, not just in terms of contract specs, but in terms of its market. Good example, if you're going to, I'm just pick a random one. You're going to trade the 6E, the euro future. That's one you want to be pretty familiar with. The European markets, European fiscal policy. When you trade this, you're probably not going to be trading this as much on U.S. market hours as you would on London hours. So there's all these little nuances that come into play. But once you kind of find your lane, find the contract you like, the size that's appropriate for your risk tolerance, then you can get into the sort of the strategy side of, am I an opening range trader? Am I a Bollinger Band trader? Do I trade VWAP? Like, That's when you kind of get into the tactical side. But before that, you really have to have like a good 100,000-foot view of what you're doing before you kind of dive headfirst.
Got it. I think that's really good pieces there. Hope everybody's taking notes in the chat. I just see more and more joining. Evan, Ryan, Jordan, you guys want to jump in? Any thoughts here?
I think the thoughts on just risk management is of the utmost importance, and just sizing. I mean, we talk about it all the time in spaces, and I mean, I tell everybody, with the way volatility is constantly changing, sizing is really got to be, at the top of your importance list and priorities, because when you're trading in an environment where VIX is at 12, 13, you can probably size fairly heavy. And then, VIX ends up propping up to 22, 23 bucks. That environment is extremely different than what you've been used to, and I've seen a lot of good traders be taken out from this. It's happened to me myself. Right. And so I just think, no matter what strategy you're trading, no matter how you're looking at the market, the sizing aspect and just the risk management aspect is what's going to keep you alive. And it's what's most important, right? I could take terrible trades all day long, but if those terrible trades, I'm only losing what I intended to lose, then it's part of the plan and it's totally fine. Right. And those terrible trades were just part of the process for today. And that is what it is. Right. But just goes to show that risk management is what's going to keep you alive, even if you end up making some stupid moves throughout the day. As long as you're not oversizing, you're gonna survive. So I just love the thoughts on that. I think risk management is the most important. So love that you're bringing it in with that.
Yeah, and it's one of those things where I see a lot of creators and new traders talk about risk management in sort of like the generic sense, but like let's tactically drill down into what that looks like, right? It could be a preset amount of money you're looking to, you're willing to lose on a given day. It could be level based. In the trading methodology I use, sort of rule number one is, before you get into a position, where are you going to get out if you're wrong? Right. That's the first question I think a lot of traders don't ask themselves. They see a formation, they see a setup, they see a level getting hit, and they sort of jump in. And then afterwards they're like, all right, I'm going to risk one to make two, or I'm going to, it's sort of a generic sense. In the sense of this, like if we were going to get long or short here, the first question I'd be asking myself is, where are we going to put our stop if we're wrong? And, this is one of those days where, we got like I said, the best move of the day was probably this move at 10 a.m. If you were on this move, it probably made your day. You're shutting down, you're walking away. Now we've got a bounce off of the 1 and 3 day pivots back into the opening range. Opening range gets rejected again, back to the top of the 3 day, back to the bottom of the opening range, back into the 1 day. And now here we are back at the bottom of the opening range. No clear sort of conviction on whether we should be long or short here. It doesn't feel to me like, it feels to me like this area between 68.35, 68.20 seems to be solid support for the day. And if we go back to that open I mentioned, the London open at 2 a.m. probably set the bottom for the day. If we let's just highlight that for visual sake. If we take the first 20 minutes of the London open, you can kind of see like that's been the low for the day. So the question is, all right, if we're gonna, let's say we were gonna get long here, I'm just picking randomly, I'm not saying we're gonna do it, but the question is, like, where would we get out if we're wrong? And I kind of leave it to you guys, like, just based on what you see on my chart or what you see on your chart, like, what's a level you think that if we break today, like, we're getting out at, essentially?
That most recent low for me. If the market wants to trade higher from this area, I don't think we should have to go take that most recent low, personally.
Yeah, so let's just say the bottom of the one day pivot range. So we'll call that 68.29. Market's trading 68.42. So just doing a quick math, that's 13 handles on an S&P E mini. That is 500 plus 150. That's $650 if we're wrong. All right. So if we got long here, we'd be risking about $650. Then the question is, all right, where do we think the market can get back to Does it get back to the highs of the day? Are we just going to sort of churn around the opening range? If we did get back to 63, that's about a 20-point move. So that's about $1,000. We'd be risking 650 to make 1,000. It's not exactly 50-50. We probably have, I'd say like a 35-40% chance of that happening just based off the implied risk reward there. But that's sort of the math once again, like putting it all together, our chart, our levels, the contract size, where we're going to get out if we're wrong. Like if we want to take this position now, and let's just, we'll just get in right now. All right, so we're long 1 and we'll put our stop down at 68.28. And you can see using the active trader ladder, super easy to trade. Futures is one of the reasons why it exists. And so if we look at that, if we switch over from price on the ladder to P&L, risking about 775. If for your account size, that's way too much, then you would be probably trading the micros, right? 10 micro contracts equals 1 E-mini. And that would allow you to sort of dial that risk in a little bit more granularly. If you're not trading an ES, if you're trading MES, I always tell people if you're trading more than 10 MES, there's a case to be made for scaling in and out of positions using micros. But if you're like trading 20, 30, 40, 50 MES, you really should just be trading 1, 2, 3, 4 ES. It's the same thing. It's just, less commissions and exchange fees. So once again, you have to understand your contract sizes and all of that. But this would be sort of step one is, all right, we've decided we're going to get long here. We think we're going to break above the opening range again and maybe get back up to the highs. If we get below this 1-day pivot range, we're just getting out. The other thing, Gav, that I learned over the years was something called a time stop, which a lot of traders don't talk about. But this is another thing I learned from Mark Fisher. If this position is not going our way in, say, like the next 10, 15 minutes, like we may just call it quits and exit the position, even though our stop order hasn't gotten hit. And usually that just comes from the sense of if the market's not moving your way immediately, like how much do you really want to sit around and wait to be right? And the time stop can save you a lot of money over time. It also can get you out of position maybe a little early. So it ultimately comes down to the setup you see, the way the market's moving. And as we talked about earlier, this feels like very much a choppy day of just sort of back and forth, back and forth. But yeah, so we've got a position on now, and we'll see what happens with it.
Michael, let me jump in, Gav, if you don't mind. Michael, I want to ask you, this is something I ask a lot of different seasoned traders. How do you adjust your position sizing? Do you look at the VIX? Do you look at the current range? Do you look at maybe the overnight range, or like a big picture, daily chart where, if we're in a breakout or scenario like that, or a breakdown, break a structure, do you change sizing based on market conditions as well? Or do you say, hey, I'm going to risk, like you were just doing the math there, saying, hey, I'm going to risk X amount of dollars on this trade, and I'm looking for it to go here, and just path it out that way?
Yeah, it's a great question. I like to answer that one with a bit of an analogy. So most of my life, I was a baseball player. I don't know if you guys ever played baseball growing up. I played through college and after college, but I think if you ever played baseball, you understand the concept of like a hitter's count, right? Like some hitters were, they were sitting first pitch fastball. Some would work themselves into a count, but if you've got if I'm 0-2, I'm very much in a defensive posture. If I'm sitting 3-1, I'm looking one pitch, one spot, and I'm trying to drive it. Trading isn't that dissimilar. You're looking for setups that provide ultimately asymmetrical risk, right? You're looking for in the sense of my screen that you see here, I'm looking for 3 or 4 or 5 of these indicators sort of all lining up. And it doesn't happen often, but when it does, that's when you may consider like upping your size. And that's like an A+ setup where you're willing to put on more risk, but you're really saying like, I think this level is going to hold for whatever reason. And if I'm right, I'm going to be right big. And if I'm going to be wrong, I'm going to be wrong quick, and I'm going to be out quick. This isn't like a position I'm going to like sit in for hours and days. Like, I'm waiting for those stars to align. And a good example of this was last a couple weeks ago when we had the Nvidia earnings. So here's the day of Nvidia earnings. It was very much a sideways market day. Nvidia earnings come out, we get the pop. Remember, Nvidia is a huge component of the S&P. So if you're trading S&P futures, you very much need to know what earnings are being announced, what economic news is on the calendar, when is the Fed talking, because those things are going to move the S&P market. Now we get into the overnight trading. We just kind of go sideways. We start catching a bid around 4 a.m. Central. And then here's a perfect example. This is not like an AA plus setup, but this is where, a normal typical opening range breakout tries to get above the first pivot point. Fading this would be like a bread and butter trade for me. I love fading these blue pivot points, because where I place my stop on those is essentially somewhere right above the pivot point. If I was fading this move, if the market was bouncing off of this, you get long and you kind of put your stop below that pivot point. It's a very short, quick type of trade setup. If you're wrong quick. It's like kind of a little bit of a paper cut when you're wrong. But here's an example where, if you got on this side of the trade, I'm looking for these types of opportunities where I think, hey, and you remember what it was like post Nvidia earnings, the AI bubble talk, like, were they going to meet expectations?
I took this exact trade that you're like showing here, which is lovely on this stream actually.
Well, kudos. Because when this happened, I was walking into the dentist's office. I had to get some dental work done, and I looked at the market when it was kind of trading around here, and then halfway through the procedure, I'm like, nitrous is on my face, and like we're in the middle of like, the work, and I pull out my phone and I see just the market has cratered, and I was so mad, because this is a trade that I normally like to take in the sense of, hey, if it doesn't trade above the sort of initial pivot point, then it's a quick short. And usually it just sort of kind of comes back into the opening range. Maybe you get down to the first pivot point and it's like great trade. But when you get on one of these where it just the market falls out, this is a once in a blue moon trade. And I think to answer your question about vol, it ultimately depends on how experienced of a trader you are, because the best times to trade are when VIX is high. And people think it's counterintuitive, like, hey, when volatility is when volatility is ripping, you should kind of like step back, and it's actually the opposite. When volatility is strong, that's when you get those types of moves. When you get this sort of one directional, the algos kick in, there's a liquidation event, margin calls, or whatever's going on, like the complete opposite of what we see today, where it's just 40 points up, 40 points up. Like,
yeah,
this is
well, it's catching people offside, right? It's somebody's mispositioned completely, and they're having to flat out the door or hedge the other direction, things like that. And we talk about the vol a lot, and I love what you said right there, because for me, 18 to like 22 VIX is like my sweet spot. If we get much above that, then I have a little bit of the problem we were just kind of talking about. Where am I wrong in this trade? Because I don't want to have to give it a 50, 100 point cushion on it at times, knowing that it's probably going to overshoot when VIX is really high. But I love that higher vol. I love what you said there, because that's what really creates the opportunity.
Yeah, and what's the nice thing about the higher vol days? So let's take a little bit of options knowledge and apply it to the futures market. So what is VIX? VIX is just the 30-day implied volatility of the S&P 500 as derived by SPX options. That's all it is. It doesn't calculate historical volatility, which you can look at a lower chart study for HV for any ticker, and it's essentially looking back at the last 20 days of realized returns. Implied volatility, or VIX, is essentially forecasting for the next 30 days, like how big is the expected move for the S&P 500? So like using your numbers, let's just use 16 for an example. If you have a VIX of 16, that's essentially implying 1% daily moves in the S&P 500. And we get that through kind of a mathematical calculation using pricing models. But it's this thing traders use is called the rule of 16. If VIX is at 24, it's essentially pricing in 1.5% daily moves. 32 would be 2% daily moves. So like every unit of 16 is like 1% of daily moves. Now VIX
Is that on both sides? Just to clarify, is that like 5% or 0.5% down, 0.5% up?
no 1%
Like it's
ways.
1% both directions. Okay, just
Yep.
making sure I had that clear.
Yep, and that's once again, what is implied volatility? It's essentially within a 68% confidence level where the market's going to land 2 out of 3 times. That's all implied volatility really is a standard deviation. And so that's where VIX right now is at a 1684. Let's just round that to a 16. We would expect with, an opening price of 68.44. Do the math on that right now. It's what, 68-point range? Yeah, so we would expect that the market's going to land 70 points higher, 70 points lower today off of that opening price of 68.44. So what does that put us at? Roughly 69.10, 67.70 is kind of the range. And if we kind of zoom out, that would be, let's just add in some easy drawings here. 9, 10. Just using my drawing tools on Legend. And then 67.70. So between these blue lines, VIX is essentially implying that we have a 68% chance that the market will land between here. And clearly we've stayed well within that range. If my math is correct, I could be off on my math. But the other thing you do is you can use the futures options market. We don't have futures options yet on Robinhood. It is on the roadmap, as I'm told. When and where, I don't have a clue yet. But you could look at the options for ES and then essentially take the implied move from those options as well and calculate that, or you can use VIX, which is once again using SPX options. But ultimately, when VIX is low like this, you're going to get more chop, right? And that kind of makes a tough trading environment. When VIX is at a 25, 30, you're getting 100-point move up, 100-point move down. And as long as you're nimble in managing your risk and size, that's when it's really a great environment to trade futures, because you get those really strong moves off of key levels, especially pivot points and levels that traders look at. Where today it's tough. You're just kind of sloshing around in like water in a bathtub. It's just not going anywhere.
Yeah, this makes for a tough trading environment.
There was one question in the chat. You mentioned the pivot points a few times. I just wanted to give you a chance to address which pivot points that you're using, maybe what type of calculation you prefer there, if you like the daily values, and is this an indicator, I guess, built into Legend?
So I'll answer the second question first. No, it's not built in yet. What you're seeing are all drawings. So I'm calculating these off platform right now, and then I'm just drawing them on my chart. However, we announced in Vegas this year at Hood Summit that we will be rolling out next year the AI scripting for indicators. And I'm actually in the process what you're seeing on screen is the live production version of Legend. But obviously as employees, we get to do beta testing and alpha testing and other stuff like that. So working with the product teams right now to try to essentially use my setup as a use case for the Cortex scripter and seeing how good it works. Just starting that work as we speak. But the second question, so I think you can find the actual calculations online. Once again, it's essentially trying to use Mark Fisher's methodology for calculating opening range and pivot points. If I remember correctly, it's a combination of 10 and 20 day average true ranges, and then doing a certain percentage of those that creates sort of a value. And then you add that value to the top and bottom of the opening ranges. So I'll go to a day that isn't as cluttered, and you kind of see how, these set up. Let's get a day where we just had clean. Here's a good day, the Nvidia day. So essentially, your opening range is, for me, once again, I use a 20-minute opening range, and there's no right or wrong here. I think the thing to remember is you want to be consistent with your opening range. You don't want to be a 1-minute opening range trader on Monday and a 20-minute opening range trader on Tuesday. I've just always been comfortable with the 20-minute opening range. It's kind of the old school opening range back when the market was less algorithmic. I also find if the shorter the opening range gets, the more initial noise you get off of that. I just kind of I want to let the market sort of settle down in the first 20 minutes. And then once those first 20 minutes are in, that sort of defines the opening range. The first pivot point, which Mark Fisher calls the A pivot point, and to take a step back. So he wrote this great book back in 2002 or 3. I forget when he wrote it. It's called The Logical Trader. It's one of those, like, when people say, like, what's a good futures book to read? It's the first one I point him to. It is a bit dated because it was written back when most of futures trading took place in the pits, and the sort of Globex screen hours were just sort of being adopted. But the principles in that book very much still hold true around building a methodology, risk management, the pivot point style of trading. And so this first pivot point, I'd have to look it up, but I believe it's something like 10% of the average of the 10 and 20 day average true range. And once again, that's going to give you just like a base value. Let's just call it $4. I'm making up a number. That $4 would get added to the top of the opening range and subtracted from the bottom of the opening range. And then your second pivot points are kind of your reversal pivot points, where, if you break below one pivot point, you'd have a short bias for the day, and you would only begin having a long bias if the market reversed and traded above this pink pivot point. That's just kind of the bread and butter version of the trading style. But yeah, you can search this online. Just search Mark Fisher ACD pivot point calculation, and you'll find something up there with the way to calculate it.
There's probably a free trading view script out there too for people that are really interested. What was the name of the book? We had a question yesterday on here about some great trading books and stuff to dig into. What was the name of that book? I just want to make sure we put that in the chat for everyone.
The Logical Trader by Mark Fisher.
The Logical Trader, Mark Fisher. Perfect. Appreciate that. Gav, I don't know if you, Evan, or Jordan, I don't want to hog the mic here. I could sit here and talk with Michael all day. I love talking with futures traders.
I have a question. Obviously, Michael, you work over at Robinhood. We did get a question from the audience. I figured I'd just give you the chance to answer. They asked, how is Robinhood, and they're assuming they're putting out the platform specifically. How is it better and offer something more than other platforms offer? So I figured I'd just put that up to you.
Yeah, it's a great question. I'll preface by saying, Robinhood Legend is only 1 year old. You guys were there in Miami when it was given birth, so to speak, down at Hood Summit 2024. And in just a year, I think we've added a ton of capabilities. And I think what's going to make Legend ultimately a great trading platform is its design. So we've taken sort of the Robinhood design mentality but we've worked with the product teams to really express to them that should be built for a more advanced trader. Where our mobile app, like the DNA of the mobile app, is truly about like simplistic design, elegant design, great user experience. We're taking a lot of those elements and building them into Legend, but still packing it with sort of the horsepower that you would expect from a Trading View, a Thinkorswim, a Tasty Trade. Now, we don't have full feature parity yet, but trust me when I say this, I think you guys sort of see how fast the rate at which we ship new products, I think is a huge advantage for us relative to the other legacy firms. Once again, completely acknowledging that there's a lot of stuff we still don't have, but just in the last year, we built this thing. Gav, you saw when we were down in Puerto Rico, the story I told of, I'd been at Robinhood for 5 years, and it wasn't until we launched Legend and Futures that I didn't bring my money over from Thinkorswim, where, one, I used to be an employee, and two, I traded on Thinkorswim for, most of my trading career. Legend is finally in a place where I was like, all right, it's got futures, it's got options, it's got a trader ladder, it's got everything I need. And so that brought my money over to Robinhood. Still, once again, a lot of work to do on Legend. And the more the customers, tell us what you guys need, that stuff gets stack ranked, and our product teams attack it pretty aggressively from a pace of shipping new features.
There you go. Hopefully that is helpful for the chat. Appreciate the question.
Yeah.
There you go.
Real quick, checking in on our position. We were taking some heat here. Our stop is sitting down here at 68.28. The 1-day pivot held, as well as the pivot point. And this is a good example of when two indicators kind of line up. We have our daily kind of lower pivot point, as well as the 1-day pivot range and the 1-day pivot point. And if we had wanted to add to this position, that would have been a good opportune time to maybe add and then just, turn this into a stop for 2. But it bounced up. But here we are sort of stuck between the bottom of the opening range and the top of this 1-day pivot. If we don't see kind of a move above new highs, I say in the next 5 or 10 minutes, I'm probably just gonna cut my losses on this and employ that concept of a time stop. But for the purposes of the live stream, it's fun to have a position on.
Yeah, I love it. I think it brings an extra added depth of action to these streams. That's for sure. Ryan, what else is on your mind there?
I was going to ask this question. Does Robinhood connect? Does it have a direct connection with TradingView?
No, we don't. This is a question we've been asked by a lot. We think ultimately we're going to build as good, if not better, charting package than TradingView. I know TradingView has a lot of functionality. There's social components. There's custom scripting and sharing, but all that stuff is on the roadmap. And I would say give it another 6 months to a year, and I have a feeling like our charts are going to be pound for pound as good with TradingView. But I understand, you've got something built on TradingView, you want to execute the trades through it or use some kind of API functionality. It's a very common question, but I think we're going to continue to build out the platform. Study wise, they've added, I forget how many we're up to now. Well over 80.
There's so many. I go on there on Legend and play around with them a lot. There's more and more all the time.
Yeah, and then like I said, once the custom scripting is rolled out, and then you throw in the other feature that we discussed at Hood Summit this year, which was the social network, the ability to share, copy trade, a lot of that stuff is going to be available through this. And then, to really answer the other question about platform, we still have a pretty good cost advantage. That's one of the things we do better than most is, our trading, like the commissions on futures. I'm a Robinhood Gold subscriber, so I pay 50 cents a contract plus the exchange fees. When I was at TD, you remember, so I started my career at Thinkorswim. We got acquired by TD Ameritrade, so I worked for TD Ameritrade for almost a decade. and then Schwab acquired Ameritrade, and that's when I left for Robinhood. I think when my Schwab account, I pay like $250 a contract for futures. So, it's just the cost advantage is a huge benefit as a Robinhood customer. And look at that. We're back to break even on our position, starting to get some positive movement here. Would love to see a push above. This middle line is just the midpoint of the opening range. A lot of times you see price action work off that level. So I always put it on my chart. I don't necessarily use it as an entry or exit point, but it's a good spot to know where markets might, like you can see here, sort of tried to test and break through it earlier and failed. That's a good thing to point out. It's like, even though if you don't trade a certain style, it's always good to know what other traders do. And you might have certain levels that are of interest, even though it's not in your sort of trading approach.
I love that comment, actually, because one, from hosting spaces and these streams, I'm around a lot of different traders, and at first it can be a little bit of like, it's a lot of noise, right? Especially somebody newer in the audience, you hear, a lot of different trades going different directions, different, rationale and stuff like that. But what I figured out is exactly what you just said. I can learn just enough about other people's trading styles that fits into what fits me as a trader, and look for confluence, or look for hey, maybe that's not a super strong trade. Jordan trades a lot differently than I do, but I've traded with Jordan day in and day out for how long at this point, Jordan? A couple years maybe.
Oh, it's been a while now.
Yeah, been a while.
I love it. I know when you're in a trade, and you know when I'm in a trade. It's funny.
And
we learn each other's
when you're
style.
in a trade, I pretty much know why you're in the trade now, because I've learned and I don't trade your style, but I can use it as confluence for mine. So if there's something that's going in my direction, or if there's a setup that I see that I like, for example, if I was looking at a long right here, I could say, okay, this is why I like it. But if I know Jordan's style, and I say, okay, well, Jordan's seeing this within his trading style that's also in confluence with that, that makes me feel a little bit better about that trade. And the inverse of that would be, okay, I'm looking at getting long here, and Jordan's saying, hey, I've got a huge area right above that I think we're going to tap into and reject out of. Well, maybe I wait on that trade a little bit. Maybe I don't feel as good about that trade. Maybe I size down that trade, but I take that into, and I don't do that with everyone out there, but just, with the traders that I know that I trade with, and I've figured out their styles, because there's a ton of styles out there, Michael. And I'm curious what style you would say that you probably trade the most. I feel like mine's just a hosh posh of a bunch of other styles put together. I think I'm a confluence trader with futures. If I can find 6 things that line up between different styles, whether it's opening range, whether it's pivot points, whether it's volume shelf and auction market theory, some of those things, I kind of just put them all together. I'm curious your thoughts on that, and if that's kind of where you were going with that comment, is, hey, I can learn a little bit about somebody else's style, put it together with mine, and make a better decision.
Yeah, for me, it's sort of two-pronged approach. As an educator for trading, I want to learn as much about as many trading styles from an educator's perspective. From a personal trader's perspective, I think what I've been taught by others is simplicity over complexity. And while this looks complex to someone who's not traded, like I've stared at this sort of setup for 10 years. So to me, it's like someone sort of sitting at the edge of the beach and watching the waves and kind of knowing when the waves are coming in and out the side. Like I just sort of get a feel for it. But I think there have been times in my career where, all right, well, let's add a MACD to this, or I watched a video and this person's doing this, let's try this. And then like you get into that sort of paralysis by analysis moment. And at the end of the day, like you want something that, one, makes you confident, right? So that's first and foremost. It doesn't matter if the system's good or bad or whatever. If you're not confident trading it, like that's going to impact your trading. But two, and this goes back to the first question you guys asked, is like you want a methodology that helps you employ a technique for risk management. And if what you're doing is all about entries that's great. But then the question once again is, the first thing you should ask yourself is, where are you getting out if you're wrong? And if you're just sort of, well, I'm going to pick the bottom of this candle, or, I see this level from earlier. Like, I see so many young traders, they have like the amount of lines on their chart. I know there's a lot of lines on my chart, but these are like predetermined, pre-calculated. Like, they're just drawing sort of every high and low and every trend line, and all of a sudden it looks like a spider web, and you're like, I don't know how you can trade
You
that.
can't even see price anymore.
Yeah. So
or people that they'll just take 2 random candles and put a trend line on it. It's like, what are we doing?
yeah, and then it's like, okay, well, what about the 4-hour trend line, or the 1-day trend line, or the week? Like, I think one mistake a lot of traders don't do, and it makes sense if you're trading intraday, it doesn't matter, but like always having a screen that has your yearly chart, your monthly charts, because those levels are important for like longer term market structure and direction. And of course, the more you zoom in and the more you get to like 10 minute to 5 minute to 1 minute, all of a sudden you're looking at tick charts. Like, that can get noisy. And when you're getting that granular, like, you're playing with the algos. And this is, I think, one of the biggest misconceptions that retail traders have, is that like the algos, the market makers, they're all out to screw retail. That's not true. Like, and I can say that because I worked with a lot of market makers. I know a lot of HFT traders that I met over my career. Like, the game they're playing is totally different than what we're doing. And the reason why it might seem that your stop orders are quote unquote hunted, or you're getting chopped up because of the quote unquote algos, it would be like the equivalent of trying to like water ski, but right behind a big like jet engine boat, like where the waves are just so choppy. Like, I see Ryan, like, you're going to get chopped up because you're just in the wake of market orders that are coming in nanoseconds. And you're like, oh, I got long and I put my stop like 1 point. Yeah, well, like the odds of your stop getting hit, or even like here, like,
Well, it's predictable, right? I mean, most people are putting them in predictable places, right?
sure.
Like,
And
for instance, like a psychological level, 25,000. If I'm trying to long off that, where do you think my stop is? Probably 24,980, 985, 990, right? I'm right in the wake, like you're saying, of where big dogs are going to come in and wash me out.
and
Essentially,
that's one of the reasons on my chart, and this is something I'm going to turn into a study on Legend. All these white dotted lines are just the even numbers, 6,700, 6,600, 68,
I
because
love that.
it's a level that is going to have people, sort of waiting to buy or sell. And this is where I probably am not going to enter it or exit a trade just based on a round number. But if you see a round number on top of a pivot point, on top of a pivot range, now we got like 3 things coalescing around a level.
yeah, and they're all different, right? Giving you kind of that same idea, which is just multiple points of confluence. It's
That's
great.
literally what I look for as a futures trader, is like multiple points of confluence, just like that. If I see, a whole number, or even if it's a few points, it could be a few points either way on a volatile asset, especially like I trade NQ a lot, right? It easily can overshoot 10, 20 points either side of a level. I think about them more as zones, and I trade it accordingly. But if I see a whole number, if I see a pivot point, if I see a gap fill, multiple things that I can, piece together there. And then I'm always marking out, not just like what you see on Michael's screen here, the whole numbers on ES. Another thing that I do pretty much daily is I go to my ES chart and I put the SPX levels on there as well. So I put the whole number 6,800, 6,850 on SPX. If you look at the high of day on SPX today, 6,850 whole number, about every 50 is what I do. So if you look at the high of day on SPX and it's right at 6,850, it's right at a double top. And then you can go line that up on your ES chart. And so I'm watching ES more than I'm watching SPX, but I mark the levels out each day, and that spread moves, over time. So I'm manually putting these on just about every day. I do the same thing with certain NDX levels, big numbers for NDX over on my NQ chart. But, with that, like this morning, I took a short, and that was part of my confluence was, okay, possible double top here, 6850 is a huge level on SPX. There's a lot of gamma positioning there, and I can line that up on my ES chart and see, okay, it's right about here. I had it marked at like, I think right at like 62 or something like that, 60, somewhere right around 60, 61. And I said, okay, well, if it goes through this more than 4 to 5 points, I know I'm probably wrong pretty quickly. And that goes back to that baseball analogy that Michael made earlier as well, is, okay, this feels like a pretty, we were a little overextended from a lot of things from price action. So I just put a bunch of things together and said, okay, here's a nice, this is a 2-0 pitch. The pitchers, bases are loaded. Guys got to throw one down the middle, and I'm going to take a swing at it.
Yeah, I love the callback to the baseball reference. I think it's something that I think most people played baseball growing up, whatever level. But you want hitters counts. You want to put yourself in a hitters count, and as someone that played a lot of baseball, there was no better feeling than, all right, I'm sitting 2-0-3-1. I'm looking fastball middle in. And that's the only, I'm swinging, and I don't care if he throws a curveball. Like, this is one of the, to take a detour into sports. The amount of times when like a major league hitter looks silly swinging at a pitch, it's because they were like, I'm going to swing like it's a fastball in this spot. And if it's there, it's going a country mile. And if they throw a slider, cutter, breaking ball, I'm going to look like an idiot. Like that, it's similar. Like in trading, not every 3-0 setup or 2-0 setup is going to be one that you knock out of the park. You might pop it up. You might, swing and miss. But, here's an example where I think our entry could have been a bit cleaner. Now looking at this, we got in kind of towards the bottom of this opening range. We took some heat. If we had been patient, worked a limit order down here to buy off of this pivot point and pivot range, we would be in a really nice. But look at this, we're up about $250 on the position. Trying to get a scratch for the day. This is another thing with trading. Sometimes breaking even is a great trading day. Today I was up about 1,000, down about 700. Now I'm closing in. I'm back potentially on an even day. That you have to take as a win as a trader. As opposed to always being like, I have to make money. They have to make. Sometimes it's not about what you make, it's what you don't lose. And those are just as satisfying as the days when you walk away with a big payday. I'm curious, you guys, like, you're in a winning position like this. Do you ever move your stop up? Do you trail it up? How do you guys like to exit positions?
I personally have a whole system for that.
Yeah.
A lot of the time it's going to be whatever first target would be. If it's first target, but not enough actual range for me to get a positive risk to reward or what I'm actually looking for, that'll generally be my break-even spot. If I can go break even on a trade, that is a winner. And almost every trade that I have, I'm going to have a definitive spot of where we should not trade back here if I'm right and if I'm going to go to my target. And so I love break-even trades. I've learned to love them, like you're saying. Hitting break-even on a day is a win as a trader, and we need to realize that. And same goes for just an intraday trade, right? If I hit break even, that's me removing my risk from a trade, and that was a free trade I took, right? So I'm always moving my stop, but kind of always letting the market tell me where to put it as well, right? Given just what I'm looking for. Like, for instance, right now, that high that you have to the left, if we were to take that out and go higher, I would probably, in my head, put stop at break even on this position, because if we're breaking that high to the left, and we're going to go to full target of the high a day, we should be able to just run to that high of day. We shouldn't have to come back to your entry, in my opinion. So that's kind of how I would do it in given this position, if I was targeting the high there. So yeah, that's kind of how I do it. But I'm always looking to move my stop just accordingly, of course.
Yeah, this is one of those where I like to look back on the week and sort of get a sense. Back to last week, got around 68.44. Right now we're trading 68.47. So we're basically back to the highs of, what was that? Thanksgiving, pre-Thanksgiving. We get to the high of 68.64. We double top that today. We're very much in a range bound market, going from 68 to 68.65. So, you know, this is one of those things like, what's the catalyst that's going to drive the market higher? And I know everyone's talking December, and, you know, are we through sort of the initial kind of correction that we had the last few weeks, which it wasn't, you know, it was almost a 5% correction from the highs.
Yeah.
So definitely healthy. Now the question is like, is there enough oomph to get us at least today? Like this is where you start thinking, all right, we're sitting at 1:55 Central Time. Sorry, I'm in Chicago, so I always quote things in Central Time.
Oh, you're good.
Equity markets close in an hour. You're going to start getting, you know, what I like to call closing range traders. You know, there's opening range traders and there's closing range traders where you got to ask yourself, where's everyone positioned today, and is anyone going to take that home overnight? Because you might have a day where, like, this isn't an example of that, but you might have a day where you have a big down move or up move, and then right around sort of after lunch, it sort of kind of starts fading, and then we get a big sort of move back towards the opening range. And I always say that's just people saying, you know what, I made money today. I don't want to go long. I don't want to go home long or short overnight, and I'm
Yep.
just gonna flatten. And this is one of those days where it's like we're right back at the opening price of the day, which tells me this is one of those days. It's just a lot of slop and chop. So, you know, we may have to ask ourselves, like, when do we want to get out of this position?
Yeah. Those
Yeah.
internal
I love
highs
that.
might not be a bad spot.
Well,
But,
so
Yeah, go ahead, Em. Go ahead.
oh, I was just going to say, I love what you said there, because like some of that just market awareness that I think comes with, you know, maybe time and experience trading as much as anything, but it's something that I don't hear talked about enough, is just, you know, being aware of what has happened, where did we come from, where are we going, and what's going on, situational awareness. And I think about that a lot too. I mean, are you going to want to go home long today? Do you want to go home short today? Are you sitting comfortably in runners? Do you need to cover anything? And you look for like some profit taking. So a lot of times on Friday, you know, if you have a trend day on a Friday, especially, okay, somebody made good profit. They probably had good profit throughout the week. If they've been in, you're probably going to get some profit taking toward the week. And I'll either play that as a trade, or I'll be looking to kind of do the same thing myself, because I want to just stay with the flow. I want to stay in that wake. I don't want to get outside of it into the choppy waters a little bit. And then you asked about the like the position sizing and stuff a little bit too, and or the moving the stop and stuff like that. And you know, personally, when I enter a trade, I only use micros. That way, I can trim as I go.
Mhm.
And I enter a trade, I set my risk, and I immediately, when I enter the trade, is I plan out where do I take profit on this. And you know, a couple of things that you guys just mentioned would be areas that I would look to take profit. And so if I was in this trade, I would the same thing. I would say, okay, kind of these equal highs, this area right here where there was a rejection, kind of the opening price of the day over there, you know, some of the pre-market highs as well. Probably take some profit in there, maybe take a trim there. If I usually get to my second trim, I usually look to trim twice every trade. And once I get to that second trim, I'm usually okay. Let's go ahead and move that stop up to maybe break even, or I look for an invalidation point. If it's in a trend, if it's making higher highs, higher lows, okay. At what point does that invalidate? Maybe I don't need to go all the way back to my entry, but as long as it's continuing what it's doing, I can keep moving my stop up, in progression that way. So that's another way that I kind of manage a position that I'm already sitting in. Now, in this case, I don't know, it's just one contract here. You're pretty much, you're either you take profit or you move up the stop and ensure profit. Yeah. So, but just, for the example, but that's, for me, I'm normally going to be, let's say I'm in 9 micros instead. And I can just trim out, okay, 3 at a first target. That's maybe a little bit of an aggressive target. And then at kind of the main target where I want that trade to go to, trim out 3 more. I've locked in 2/3 of my position with profit. I can go up to, basically break even, and then kind of trail out from there. And if it comes back, hey, I've already had a great trade, I already won. And that's the way I kind of manage the same way, this type of trade.
Yeah, I do something similar. So we're trading 1 ES. Like my trading range for ES could be as small as 1. I think my max is 10 or 10 ES. And when you're in a position, like let's say I open this position with 4 contracts, there's some math you can do there. Like let's say, let's do some simple trader math. If we're long 4 ES and we do let's say a super tight 1-point stop, right? That's $200 we're risking, and not necessarily recommending a 1-point stop, but just for the math's sake. We could then sell one of those 4 at a 4-point gain, and that would be a $200 profit on one of them, and you could leave the stop in for the other 3. And if you get stopped out, that selling that one contract at a 4-handle gain would pay for the trade if you got stopped out, right? So like some traders have this concept of paying for your trade. And you can do that when you have multiple contracts. And then it's just about sort of deciding what are those pay levels based on the amount of contracts you trade, the tick value, the sort of 1-point increments. And then traders will build a system, like I said, like, sell the first one at 4 handles, sell the second one at 8, sell the third one at like 16, and then let the fourth one be a runner. And at that point, like, even if you bring your stop up to like break even overall, like you're making money on the day. So that's one of those things where like, so much attention is paid to the screen and like what's on the screen and where am I getting in, when am I getting out? When a lot of really, like, if you think about it, like look back in the old historical videos of floor traders and the floor of the Chicago Mercantile Exchange. They sat there with cards in their hands and pens, and they were shouting and doing sign language. Like they weren't staring at a screen with levels and studies and indicators. They were simply watching the price action, and they would know and they would see what the pit was doing and where the levels were being bought and sold. And so, just sort of having that awareness around price action, sort of where you're going to structure trades when you're trading multiple contracts. To Ryan's point, like we're in a 1 lot here, so the only thing I can do here is add to this or close it or reverse it.
Yeah.
Which, we are at this interesting point where this sort of,
You could sell it by 5 micros. It'd be like a half trim.
you could theoretically do that, right? That's another way.
That would mess me up mentally, but you could do it.
Yeah, you could. We could cut our exposure in half if we sold 5 micros. I've done that before. It's an interesting way to trade. Once again, I think the tricky part about micros is you're usually, I don't want to say, you're usually paying the same commissions to trade micros as you are the bigs. So that can cut into your transaction costs. That's something always to remember as a trader. Your transaction costs are important. They're the cost of doing business. Obviously, everyone would love to trade for free, but once again, if you're a Robinhood Gold subscriber, you're trading 50 cents a contract. If you're not, it's 75 cents a contract, and then of course the exchange fees are really what kind of add up over time.
I love it. I'm going to jump in here. I appreciate you spending more than an hour with us on this one, LB. This was a ton of fun. I know we have another group joining here for the next hour for a future show that we're doing. But really a pleasure having you on. Tons of education. We'd love to have you back on this. People were messaging me on the back and they were like, thank you for getting this guy in here. Any final stuff that you'd want to share before we transition to the next show?
No, let's close the position. I'm just going to do that by doing the flatten button. I got a working order. I got a position. I'm just going to hit flatten. We're going to sell market and cancel that order. We just, we scalped what?
I love that sound, by the way.
Yeah.
You guys created a good one there. That's a good sound.
That was way better than order filled.
I know. That's 10 times
Order
better.
filled gives me like anxiety at this point.
That's like satisfying when you get out of position. Right there.
I like that one.
But thanks, Gav. I know we've been trying to sync up for a while. I'm glad we were able to hang out. Jordan, Ryan, everyone else in the chat. It was really a pleasure joining. Happy to come back on. We can talk options, futures, legend, anything. Just let me know. Happy to come back and hang out with you guys again.
Pleasure
I love it. I love it. Thanks. Appreciate you, Obi. Let's be in touch. We'd love to have you back on.
All right. See you guys.
Peace
Take
out.
care.
Have a good one.
Obi, take care. We do have the futures crew coming in, so you just got a bunch of bonus futures content right there from Michael, head of education over at Robinhood. Now we've got the futures crew coming in. We're going to keep talking futures. We're going to dive even deeper. Smooth, Nara, a bunch of the crew coming on here. Let's see who all's in here. I think Tammy's coming in. Boom, boom, Boom. We're bringing them all in. There we go.
There's
All right.
everybody.
And we got
Am I
Jordan's
big
great.
screen?
Look
I'm
at
big screen,
Jordan is
bro.
mewing so hard right now.
No.
Just look at him. Just
Get me
full
off the big
screen,
screen.
full screen mewing right here. Here, we'll do this for a second, and we'll get some. What's up, Gov, Tammy, Smooth? How we doing?
What's up, guys?
Good
What's up,
afternoon.
Drew? What's happening?
We just had a great conversation with Michael. He's the head of education over there, Robinhood. He does a lot of future stuff as well. He made a lot of references to the pit in Chicago, Gov. I think you would have really liked it.
Really?
Yeah, he said he studied a lot of books. He read, what was it? Fisher's book. What's Mark Fisher?
Yeah, Mark Fisher.
Was
is
the Logical Trader.
The
The Logical Trader from Mark from Mark Fisher, and a lot of stuff around that, and obviously how far we've come. He's big into the history side of things around futures too, which is really cool, and I figured you'd appreciate there. But I'm excited to talk some markets. I know last week we got to have some chats. Obviously, had the holiday stuff going on. We're much different spot today than we were the last couple times we spoke on here. Actually, 2 weeks ago, I think we're in the same spot basically as we were then. But what's going on, team? How we doing?
I'm doing fine now.
Somebody was long.
I kind of caught myself.
Yeah,
a
somebody
little
was
off the moment this morning.
I caught myself. I got blessed.
It
to
was
get out of
not
a
an
bad
easy
spot.
morning, I don't think, for most
It
people.
was
to be
not,
honest.
and we got thrown off because we had if you were looking for a correlation between ES and NASDAQ. I mean, obviously they don't run line for line with each other, and typically they run at about a 4 to 6 multiple where you can kind of see who's racing who out, and typically it's the NASDAQ. But between the ES selling off a bit and NASDAQ all of a sudden quickly reclaiming its highs, combined with you had Boeing was up $8, financials were up, Nvidia was strong, but everything else was weak. And I was like,
the banks off the open were nosediving, and energy was nosediving, and then it ripped back to new high of day. That threw me off.
it threw me off. I got stopped out short twice, so I kind of went from little cut on the finger to there. Yeah, I didn't quite need a tourniquet, but I definitely needed some bandaging, and had a couple of things going on, but was able to. It's so hard. You're trying to stay so focused, and while you create, you seek out setups that give you very well-defined areas of risk so you can size up accordingly. The importance of respecting your stops no matter how good you think you are and how long you've been trading. Well, that happened to me today, and I respected my stops 2 times, and it just is the way it is. I saw what was going on, and I needed to reset, and I needed to allow the market time to kind of resolve itself to provide a little bit better tell. So we needed more information, right? And finally we got it, and we nailed. We absolutely nailed the short. I think Smooth. I don't think Smooth had the 2 stops like I did. I think he was a little more patient and picked up the short right around what'd you hit? 63, 64, and finally we got the price confirmation, and that's where I was able to get short 59 and rode it pretty well. I think my last couple of contracts I was out right down at 20, so it was really a nice trade, and it was definitely a needed thing to put a jump in my step.
I'm with you. I was here on stream, and I was snorkeling deep underwater there for a little bit. Yeah, real deep. And I got blessed. The first little drop it gave got me. I did the no a little bit. I averaged basically averaged my way up into the position, and then when it dropped, I just got out break even, which was a good decision basically.
Yeah.
So I basically got out with a small. I ended up taking a small paper cut because I took off everything but a couple runners basically. But then I got that next short that on NQ it was 200 plus points. So that was my day on that right there. So yeah, I went snorkeling, and the risk management side of things. I did not handle it well today. Yeah, I'll just be 100% honest. I think anybody in the audience that was here probably saw I was like, yeah, this is going to be a bad loss unless I get blessed by the market. I just happened to be on the right side today, and that I count my blessings on those. You try not
it's
to get in that
interesting.
position again.
It's interesting. So we talked about respecting the stop. So, I mean, I've got like X number of points I get stopped. I can kind of assess what sort of size. So I know what my max risk per trade I'm willing to take. So let's say that people like earn prop accounts or whatever. And let's say that by the time you get on a $150,000 account, I mean, just using this example because I've been running through the math because, my boys are trying to get more into it. And I know a lot of guys in our room are strictly prop. But it's like if your max risk on an ES position is 3 points, and by the time you do the math, and it's like, 8 trades like that, it's like that's basically $600 per trade. So you potentially are taking 8 trades that you could get stopped out before you'd be blowing an account. I use that as an example because it's like my trades, it's like basically the dollar ratio is the same because I take about an average of 3 points of risk. I just have more contracts on. And I respected it twice, but it's like, sometimes it doesn't work. But the fact that when you consistently respect your stop and you exit, you reserve the right to get back in. You don't have to get, it's like you can kind of maintain your composure. And there's outlier things that throw everybody off their game, and things just happen. But it allows you have the right to get back in the trade. And if you've mapped out your trading with a prop account, that if maybe you've got 16 trades, 3 points of risk, so that's max 16 trades, so it's basically going to be operating off of $300 risk per trade. And then if you say it's like, well, you know what, I know I'm a hell of a lot better than that. I'm not going to go 0 for 8 or 0 for 16. So you kind of massage that a little bit. And right there, emotionally, that's like, what's your worst case? You bust a damn prop account, and it's like going to cost you what, $40, $70. You're not going to go 0 for 8, 0 for 16 if you're hanging out with us in these rooms, listening and talking trading. It just doesn't happen.
Absolutely. I hid my camera back here. I'm still here just to fit better on the screen here. That was really great thoughts. Does anybody want to add on to that? I'm sure I see several of you nodding your heads along, and I'm sure there's a lot of thoughts around the risk management side of things that we can talk about today. Because today was it was kind of a whippy day. I mean, really, there's been opportunities for both sides, but as much as there was opportunities on both sides, there was opportunities to get absolutely chopped and ran over too.
Yeah, that actually the first hour and a half, first 2 hours of the day, might have been some of the most savage trap both sides price action that I've ever seen.
Yeah, just savage.
It was. I had blood on the walls.
Yeah, and it was, for me, I see us as in a range, from 6850 to 6800, basically. So for me, the fact that we rotated into 6850 overnight, it was a really difficult spot for me to trade. So I haven't taken any trades, but watching the first hour of price action, I felt bad for anyone trying to trade that because I could see how, some people are trying to trade the breakout and just getting trapped. And then people are trying to trade the failed breakout and getting trapped. And it literally trapped both sides 4 times and then finally makes the move back to the midpoint, and just some pretty nasty price action, and quick and volatile. Like the tape is thin. And so if you're wrong in a hurry for a lot of points if your stops aren't in. So I wasn't participating in it, but I saw how destructive it was to both sides there.
These are the days that will kill your account. These are the days that a lot of the time, I managed to trade it decently this morning. But these are the days more times than not that I see just killing good traders because you get so chopped up early in the AM and, you end up blowing accounts and doing whatever. But just removing those bad days like this do you so much better.
I'll add this, like one thing that I took away on days like this, I ended up catching that big short. It sounds like Gav and some of you guys did as well. The biggest confluence I had was that 6850 on SPX, that same high right there, because I knew I could set my risk again. I knew we were a little overextended, and there was just some like internals and things that just were a little bit fishy to me on the move up. But either way, I got that trade, and it turned out to be a really big, really good trade. And I can't tell you how many times in the past where okay, nah, flip long, or after the bounce, I try to short it again, and I end up starting to give back profit. So if I get a big opportunity for me on NQ, it was a 200-point trade on ES. It was about 40 points or so from top to bottom there. I mean, that's a really, really good trade if you caught it. For me, after I get that good of an opportunity on a day, especially as like, whatever adjective you want to use for that morning, the way the morning was, and then you got a great opportunity. After that, I just kind of sitting back and not doing anything else has probably been the best decision. That's one thing that I think I've gotten a lot better at in general, is like, if you get a good opportunity, a lot of times you're not going to get a second really good opportunity on the same day. Sometimes you do, but just the way I was reading it, I was like, okay, I feel like if I try to take another trade on either side here, I could get absolutely chopped up after that big move. And so I just stayed away.
Yeah, and the key on some of these choppier days is always just zoom the hell out because it's easy to get sucked into those shorter time frames, and that's where I find myself getting chopped up more and more, is when I'm hyper zoomed in and get into that revenge trading mode. But if you just zoom out, it gives you more of a perspective of the market and where those edges are, and that's what I've been trying to be a little more patient. And the last couple of days, it's proven pretty good. Like I've said, I had a target today to short the 60 to 64 area. I shorted it. That was my one trade. I got 25 points out of it, and on the ES, and that's it. That's my day. That's all I need.
You can have, we talked on our pre-market call, I mean, the 63, 64 was a key area, but likewise, the roughly the 54. So you had about 7-8 points of risk there. So basically you try to, I mean, the initial short was to short against yesterday's highs. Completely illogical. But you had to know that back on Friday, late in the morning, the high was up back at 62, 64. You needed to understand that there could be an extra push to push up about there. So that's where I got caught. And then I saw price confirmation for the short because I was seeing a little, NASDAQ was being a bit supportive. And then all of a sudden it reared its head and it rotated back up to the high. And, and the correlation was just locked. I mean, it just got completely decoupled between ES and NQ. And there was definitely a chance that we could have rotated above the 64 and back into those highs from the second week of November. I mean, there's an open gap up there at 79 and 92. You could see that area. I mean, that was possible. The thesis that we had yesterday, and I kind of scoped, all of Twitter land over the weekend. It's like we came out of that move from Friday the 21st, and we had 1, 2, 3, 4, a good 5 solid days up. And then we proceeded to have, or actually about 5 solid days up. And that was through a low volume float up through Thanksgiving week. Naturally, one was thinking that people are probably going to reset the positions, that it was just floating on thin air. And now there was an opportunity to go and explore back below. So then if you go look at a key level of the 67.92 to 68.04.05, we have work to do there to really help build the base, create some solid structure that would actually provide a great base for us to rotate into higher highs toward the end of the year. Do we kind of continue this move on up? Entirely possible. I mean, the market's a lot more solvent than we are. It can have a lot of other ideas. I mean, we've got 69.50 above. So there's another 100 points of room that we could very easily just go run another 100 points and not even revisit some of the lows and build a basin from last week. So I think I had a bit of a thesis that I thought we were going to explore that, but I was prepared for, the rotation above and below, and I'll take what the market gives me and not try to find it. So it definitely is possible that I pushed my short against yesterday's high because I saw some price confirmation, and that's where I got a little little stuck. I mean, I like when I get the price confirmation to go add to a winning trade. I don't really try to scale. I don't like to average into something that's not working for me. So that's where I got a little stuck. But I think that the structure is really interesting. There's potential for the 100 points above and just proceed to new all-time highs, or do we go back and fill in there? We've got a full month, a full 3 weeks before we really get into the holidays.
And I find it interesting because, gosh, since October, we've been kind of going sideways. Even though it's been in this big range, we've had big moves in the market. We really haven't. I think it's been like 2 weeks, 3 weeks now in the same range on the bigger time frame. So it seems like things are slowing down a little bit into the end of the year. What's up, Tammy?
Hey.
What have you been
I don't
looking
know
at?
if you I don't know if they can see my screen.
I can
or
share
not.
your screen right here. I got you.
Okay.
There we go.
So what I'm looking at here with my Fibonacci technical analysis, so all of you have probably heard of Fibonacci, but I actually take it to the next level, and you know, I have a specific program that I use that's built just to do Fibonacci technical analysis. So what you can see here is this 68, 62 to 64 area. And that is what we're having problems clearing right now. All right. Now, what I do like to say is when I see something, you know, when I see the rock continue to hit the glass, a lot of times that glass eventually breaks. So I am looking for us to eventually break that. But right now we can't seem to get above that. And of course, that was on my radar this morning, in addition to the fact that I also had Fibonacci timing for a high and price resistance on my 120-minute chart. So I look at daily charts and mini intraday charts. I look at a 120-minute, a 30-minute, a 10-minute. I'll go down all the way down to a 1 minute if I need to. I also look at weekly and monthly charts. But what you see here on my ES 120-minute chart that I had live in my room with my clients this morning is that you see that there was timing for a high, and those are those light gray bars. I know it gets a little bit confusing looking at my charts, so I'm always more than welcome to, more than happy to share, to answer questions. But what you're looking at here is where those light gray bars are. This is the move that we saw. We came up, and that is where we hit that resistance, and that is where a lot of people probably got it handed to them, because I posted it on X this morning, and it was, I don't know if it was within seconds or a minute that that time and price held, and we just started rolling over right there. So then the next thing that I said is if we can hold these 786 retracements around 68, 15 to 18, I believe we'll continue this move up for now. Which we did. But if we had taken out those, I only had one more level at 68.05. But if that hadn't held, we would have retested the previous low or made a lower low. Now, what I'm looking for here into the end of the day is, can we bust the 786 retracement of this swing up? That is really the only thing that's in our way right now at 68.53. Let me confirm that on my 10-minute chart. Yeah, because we've gone past any what I call symmetrical resistance, which those are previous swings in the market. So what I'm looking for now is for us to clear that 68.53 area. And then I actually have a bearish two-step that has formed here. Then the next thing that I'm looking for us to clear is 68.59 to 61. And then, of course, then we'll be looking at those daily and 120-minute levels again.
That
68, 63 to 68.
That 786 retracement that you have there on ES, so
Yes.
you have it at 68.62-ish. Is that where you have it?
68.53.
53. Okay.
Yes. So it is from today. It is from the low, I mean the high from this morning to that high where we failed to where we bounced afterwards. And so what you're looking at, this is a 10-minute chart.
I've got it now. So I have one. If you just take the entire range of that down move, and you probably have this on a different chart setup yourself, but on the daily on ES, we have it's 68.62 is this 786 if you go from the high we made back like late October to the low we just made a week and a half
That's
ago?
in my cluster that's on the daily.
Yes.
I have
So
the same
that
one.
cluster,
Yep.
yes, that cluster is also exactly this gamma level on SPX at 68.50. Like all of
Oh,
that's lining up.
that's awesome. That's awesome.
That's why I've shorted that same level like twice the last couple days.
This is symmetrical resistance that I have on SPX cash at 68.48. Now we've gone over it just a tiny bit, but yeah, I have symmetrical resistance on SPX also. So I look at time and I look at price when it comes to Fibonacci, and I look at previous swings in the market for me to tell what it is that I think will happen next. So, and with that being said, hey, by the way, I will be on Fox Business with Charles Payne tomorrow at 2 p.m. And then Friday at 8:20 a.m., I will broadcast live from the New York Stock Exchange with Schwab. So super excited.
go.
I know y'all have been to the New York Stock Exchange before, but I have never been. So it will be my first time.
Oh, you're gonna love it. It's amazing. The amount of history, like for any trader that's never been, like it's like, I don't know, it's just so cool. And like Gov's probably like, yeah, whatever. But for us, like having, trading, being from, middle America myself, living now in Mexico and being able to go and like see the floor, see the building, all the monitors and stuff. Obviously it's way different than what it was, 10, 20, 30 years ago, but still just the historic, like mystic of that building. Like it was really, really cool. I'm
really looking forward to it. I'm super excited. I fly out tomorrow morning, so I've been kind of running around like crazy. That's why I don't feel like I'm as well put together as I normally am today, but I kind of came flying in here last minute.
You'll love it. You'll love the energy. It's a different, the energy level is not the same that it used to be back in the day. But fortunately for the New York Stock Exchange, it's maintained, it's finding a way to kind of add to the energy with kind of hosting a lot of the stuff from CNBC, and then everybody, knocking on the bell. Whereas if you go to the Chicago Board of Trade or the Chicago Mercantile Exchange, it's quite dead. There's not a lot going on. It's not, so and enjoy it. It's really cool.
Well, I'm so excited. Thank you so much. I'm super pumped up. I wish that I'd been around back in the days of of trading on the floor, but unfortunately, we never really got to witness that. Only in movies, right?
Well, my movie.
Yeah, Gov lived that life.
Yes.
No, it's gonna be a good time, Tammy.
And if anybody has questions about anything else, I mean, gold, I know, gold, people love gold. We're not really up against any resistance that I see as key and pivotal right now. So I do have a cluster of support. I don't know that we'll get down to it, but around 41.76 to 84. If we do fail at this 30-minute resistance, which I've got quite a bit of that, 42, and the moving averages on the 30-minute chart are crossed over to the side of the bears on gold. So 42, 34 to 37, and then 46 to about 48 are those two levels that I'm looking for us to clear. Well, there's one more, 42.52 on gold 30-minute chart. So if we come up to some of this resistance, we could fail and take out that level around 41.97. And if we do, I really do like that cluster support on gold daily at 41.76 to 84. It's a pretty big cluster. But of course, you still want to use triggers or indicators to show you if the zone is going to hold.
Some great stuff on the fibs, Tammy. Hey, Nara, what you been looking at?
So I actually just pulled up gold and Tammy was talking about it. Actually, I like the way gold looks. It looks constructive. I could see gold being sort of pretty sideways from like 4,300 to 4,100 for a while. Gold's had some pretty wide directional moves for. I mean, it had a trend from August to middle of October that was unworldly for gold. So it makes a lot of sense for gold to do a little bit of a sideways move for a bit and tread water. But I don't really see anything that screams be long or be short gold. But if like you're in medium term or long term gold ETFs or even owning the metal, I don't think that gold is a sell by any means. Silver, on the other hand, I've seen a lot of talk about lately, and we don't often talk about silver on this show, but man, does silver look like it's about to make a crazy move. It's made a pretty good one over the last 4 days. I don't know. I can pull up my chart here if you guys like.
Yeah, please. I'll throw it up.
Let's see. How do I do this one? 1 second, sorry.
I want to get back in. I wanted to long gold off of that like 4,200 area on the daily 9. It was like a back test I was looking to long, and I missed it this morning.
Yeah, I mean, gold has been a pretty good trade for this year. It's still been my most profitable trade for the year, but I mean, this is a weekly chart on silver, sort of zoomed out on silver futures. And this looks like the beginnings of sort of what gold looked like, and we can sort of gold has made this move, but this looks like, remember this gold breakout sort of from this double top area, weekly double top. Now let's go back to silver. And granted, silver is a little bit different. It's they call it the devil's metal for a reason. It's very difficult to trade silver, but this looks like sort of a massive breakout that's coming here on silver. I mean, I remember back here, and what was this in? This was all the way back in 2011 when silver just sort of exploded and then just failed. I mean, from $50 all the way down to 14, 13. Now we're starting to really make a pretty explosive move here, and this is the daily chart now. But seeing that volume really start to come in, we can even go into the hourly charts. Now, if this can get over this like sort of 60 area, I think there could be a pretty nasty squeeze on silver. So it's definitely something that's been I'm going to be keeping on my chart for a little while. Saw someone in the in the chat asked if anyone had the winning lottery numbers for today. I wish.
I wish.
I wouldn't be on stream if I knew.
Would not be here. Yeah, would not be here.
But on terms of like the indexes, I'm lucky in a lot of regards where I did not. I was not around this morning for the crazy action, but we're starting to like this is a ES chart. Let's actually pull it back and go ES and NQ next to each other. Oops, ES. This one should be NQ. There we go. Still looks pretty productive here. I mean, this is I don't know why I have my 100-day in different colors on side-by-side charts, but 100-day here on NQ was pink and over here sort of purple, but broke, reclaimed. We were talking in our room about, the 100-day being a spot I wanted to add a lot of stuff. If you look on ES, and we can actually even do it on NQ because it's pretty damn similar. This low volume area right below where we held was really teetering on a massive breakdown to the 200-day. We held almost dead on the previous all-time high from back in August, where we had bounced off it a couple of times and then broken out. Now, when you see markets that break out and then come back and retest the previous all-time high breakout, that just tells you it's an incredibly strong market. It did it on NQ too. I mean, not as really accurately as it did it on ES, but very, very similar. Broke the 100-day, came right back down to the previous all-time high area and bounced. And I mean, that bounce on the reclaim of that 100-day was just extremely explosive. A lot of times when you sort of are between these moving averages, we talk about this all the time on our morning stuff, is that when you get between major moving averages like the 50 and the 100, if you get below something and then reclaim it, sort of the move tends to be bounce back to the other one. You can see what it did here. This is the 50 and the 20 on ES back from early October. Broke here, came down to the 50-day, reclaimed the 50-day. Where did it come back up to? It came right back to the 20. You know, so you're just bouncing between them until eventually you're going to break above. Now, I think there's a good shot that we could come back to like this area here, which is this 50 and or 50-day and 20-day combined. I wouldn't be shocked at that, and then we sort of can auction this higher area. But man, if you're not taking that bounce and reclaim of that 100-day seriously as a sign of a strong market, I don't know. Trading is pretty, like when you look back on it in hindsight, it's pretty obvious. When it's in the moment, it's very difficult to do. The only real thing I added down here was I added that Bitcoin ETF we were talking about last week. What is it? iBit. But this is a pretty strong market now. Do we go and make all new all-time highs and continue higher from here? I don't know. We really bounced really hard. We might take a pause, go sideways, and just maybe meander back down to 67, 60 or something. But we're in resistance right now. I think this is a good short coming into the last 20 minutes of the day. If you like playing the last 20 minutes of the day, I think you could see a sell-off into the last 20 minutes of the day. I just don't see a real squeeze coming. Maybe I'm wrong, but I'm not.
Feels like a range day. Like,
yeah.
Until it breaks out, people are going to just take the profit, not carry any risk overnight.
Bingo. Yeah, so I like this area for a short. I think that it's a good risk reward area. I mean, you could, if you really like playing stuff like this and with a 14, 15 point stop, you could short 50 here on ES and stop over high of the day. NQ, you could sort of do the same. I mean, it's a 50 point stop essentially. I don't like being that wide, so I'm not going to take it. But, you know, I don't think this is a bad risk reward area either. I think you could get a pretty nasty sell-off here.
Yeah, you know, you also have a bit of an ascending triangle on the NASDAQ from the low print there at 1030. So, and it's also up in the resistance area. So I totally agree with Nara. I mean, up in this area, it's not, I mean, this is just a resistance area. And anytime you can get definable risk, you can just see it's like, heck, if you take NASDAQ, get short 586, 580 right in this area here. It's like, I mean, your stop could be the new high a day. I typically take about 30 points of risk on my NASDAQ contracts. And it doesn't mean that, you know, you get stopped out. Fine, it defined risk, but why am I taking it? I'm taking it because I can see a potential move down into 450. A little bit of profit taking back into that area from right at noon central. I could see that move. So I actually did put did share my screen. So what I'm looking at. Yeah, my screens are pretty simple.
Yeah, we got it. We'll get it up here. There it is.
So you can see what I'm looking at here. I don't put a lot of stuff on mine. And now you can see this area right in here that I was like looking at. And that's exactly what Nara was looking at. He was like mentioning the ES, but you know, when we look for kind of confluence, you know, between the indices, they don't move at the same cadence. They typically, there's like a multiple of like anywhere from 4 to 12, the ratio, the velocity that NQ could have well over ES. So you keep that in mind, but you can see just kind of the line here. It's like, I mean, I use basic math, basic patterns to kind of see, and this is a 5 minute, but it's really compressed, and it gives me.
I'm looking at the YouTube live stream. Are the clients seeing Gov's charts? I don't see the dark ones that I see on our restream.
Make sure you click live. Every once in a while it'll buffer and you'll get stuck behind. That's a good
Sorry,
note for the
I didn't mean
audience
to
too.
interrupt you, but I just wanted to make
No,
sure
you're
that they
good.
were
That's a
looking at
good
the right
note.
screen.
No,
If
you're
you're in the
fine.
audience, make sure you click live every so often, just to make sure you didn't buffer somewhere.
You're fine. So the same token is like, so I see a definable risk for the short here. And now it's kind of butting up against that the bottom of that wedge, the ascending wedge or ascending triangle, whatever you want to call them. It doesn't really matter. It's like just all analogous to the other type of formation. And is this now this could be viewed as a bit of definable risk for people that are thinking we're going to go retest the highs and make new highs. 20 minutes left in the market. I'm not a person that makes that bet. That to me, I don't like that. I could see us just kind of doing a little retrace, maybe back into the meat of the range here, back down to 500 area. I am noting that it's like, look at ES. Look how bloody trapped it is between 6,800 and 6,850. So again, I've got this thing really condensed at this level. And I have it condensed so you can see this open gap back on Wednesday, the 12th of November, that it's up here. That was something that was filled today. But the fact, if we actually close up here and NASDAQ closes on the highs, you do have a bit of a base, a new platform that's been built for ES right up in here. Just since from the 8:30, the open of the RG8 session, it's a 50-point base. Does that give it some hope of maybe a rotation higher tomorrow? That's if we close up here, that's what it's suggesting. So I'm looking at that. So I don't like to trade. Most of my trades are typically done by 10:30, 11. But if I see a setup, doesn't mean I'm not going to take it. But what I see here is NQ's got to break down here on that ascending wedge. That breaks down. That's when sometimes either I will jump in a trade there or I'll hit a market order and short.
Yeah, we could see a press this trade type thing if this breaks down into. I mean, I know it's 18 minutes left, and neither of us like this stuff.
Exactly.
But man, I mean, there is a potential that I'm slamming this short button here.
I am thinking about it. I keep looking at it because it seems like a range day.
That type of flush out move into the end of the day is there right now.
It is.
Not a huge fan of it.
I just don't want to be early. I just want to take a piece of it.
I don't know. I don't think you're in too bad of a shape if you want to take it here, just manage size against sort of the risk you're taking. But I think NQ is the better trade than ES here, to be honest.
I agree. It has more there's more potential velocity to the downside here.
There is, yeah. So we can sometimes see these moves. It depends on what the market on close is, but we could see a nice velocity move here. Yeah, here it comes. I think we got to break this sort of.
Kind of had the same trade yesterday, right?
25,600 needs to snap, and I'll probably get in. But
yesterday we grinded up like this.
Could be setting us up for one of those things like this morning where, it fake breakdown. So always the last 15 minutes are very difficult, and that's why I tend to not. So I'm not in anything yet, but watching carefully.
We had the same grindy move up yesterday. That once the kind of uptrend structure, this trend line that's drawn here, kind of the same thing yesterday happened. It broke and snapped back to the middle, or almost to the middle, really yesterday. Same kind of thought.
Nara, I like that you mentioned that 25,600 area, because I actually have on a 10-minute chart, I have a lot of support in that area. What made you pick that zone?
25,600?
Is that what you said? 25,600?
I'm on a 2-minute chart looking at it for entry.
Okay.
And I'm looking at all the volume sort of today that's been selling around that area. We finally broke through it. And it's sort of a break above a level and then fail it, where it tends to be the people that bought that breakout decide to exit.
Okay.
So that's how I look at those types of things. So I tend to go to a 1-2 minute chart when I'm looking for an entry to a trade versus staying on a 5-10 minute. I'll find my trades on a 5 to 10, then I'll decide whether or not it's something I like on a really quick time frame.
The other thing to point out is that I was kind of talking about, I typically run my risk level on the NQ right around 30 points. So what I'm looking at here, I can see I could get stopped on the 30 points if it wants to make a run here toward the end of the day. All right, fine. All right, I get stopped out, fine, whatever. Defined level of risk, I participate. However, I need this to break and I need confirmation, and I definitely will sell into that confirmation. But where could it possibly go? Do I get 490? I'm looking for 3 to 1. I'll risk $1 to make 3. If I don't have a setup that suggests I can get that, I don't participate. So I'm not going to participate in this, that things aren't suggesting. If I'm not seeing a breakdown in maybe any financials or the likes of Nvidia, Broadcom, whatever happens to be strong or in favor of the last 15 minutes of the day, I need something to really break down to give me the comfort that I'm going to get a 3 to 1 on my participation of risk. So that's the last question I ask, and that tells me whether I'm participating or not. And you can see how ES is just kind of hanging right on these levels. It is 60. Actually, I'm actually on the SPX NDX, by the way.
I just took a small short NQ 25,629.
I'm hovering on it. I'm watching it with you. I'm just I don't, because of what I went through this morning and ended up with a nice day. Like, I've been super picky since that big drop.
I think we can all understand that.
Me too.
Coming into the end of the day, you're like, thank you, Lord.
This day could have looked much different than it ended up looking for me.
Yes. Well, that's awesome.
I was down like 10 grand at one point, and I was able to reframe, and now I'm up 15 on the day. So that gives you an idea of my swing. I typically I don't have swings like that on my profile. I mean, if I have a day where, if I'm up 2 to 5 or something, I mean, the worst case with me, I might have a trade where I'll lose like maybe, $1,000. And I typically don't talk about the dollars because I don't like to focus on the P&L because I prefer to talk about points. But just like him, it's rather ingrained in my son's body right now about what I experienced this morning, and it's been a while. And it kind of got me offside. So I think I'm just content just closing up the day like this, And
I kind of think about, like, if you're ever like driving and you almost have a wreck, and then all of a sudden you like put both hands on the wheel, you turn the radio down, you just kind of just get in the right lane, just take it easy. Like, okay, I don't want to push my luck right now.
Yes.
That's how I felt. I kept it on the road this morning somehow, and I just turned the music down a little bit, just driving in silence.
So I wouldn't be surprised if we do close up at this upper part of the profile, that in Globex session, watch them take the trade away from the downside and watch them rotate it back all the way down into 6,800 in ES. And then apparently I have a 5-second delay on my chat room feed. Oh, okay, I gotcha. Anyway, because I can see the setup. It's really the same setup on both ES and NQ, kind of the ascending wedge here. I could see them just taking the potential for higher out of the trade for tomorrow and rotate it all the way down. But that could, in fact, set us up for a nice long 67.95 and a 68.05. And that's a very definable risk area for tomorrow for us. It's a wide band, but that could be supportive. And again, it's a supportive area where you can define risks to put on position and correlate your size. And then if we break it down further, you can see the move all the way back down to 67.30 area. So that's on my chart right on the left side. So, and that I have more stuff on that chart than I normally ever do.
I also like that 67.25 to 33 area. It correlates with the 50 SMA. That would be if today's high is in place on SPX cash. But yeah, that 67.25 to 33. that's I like that area also. You said 30, I think 67.30, but right in the same area.
What's market on close?
Market on close. I don't see any big tech names on here.
Okay, thank you.
Google, okay, Nvidia and Google just popped up as a little buy.
Nothing crazy.
It's not huge. 617 S&P, 285 million Nasdaq. It's overall it's small.
Yeah. Okay. I'll stay in the trade. I almost got out of it there when I saw the little jump.
Yes, I just entered scalp short here, just
It's
see if it
going
pulls
down.
back.
Yeah.
I'm watching IWM sell off pretty hard. That's my confluence.
Yeah, it's not bad. I mean, I like watching the tick. And we're dropping right now. We're down back to a negative tick, so we could get a little push. I'm going to try and get a scale here, 25,610. That'll free up this trade as in whole. So we'll see. I mean, 9 minutes, it's bleh at this point, unless we get a 100-point yank. But
I'm just looking for like 60s if we can get there. I'll trim along the way.
So I've got the 15-second chart. This is my order entry chart I typically go to. Kind of have that Wilders, just a kind of a bit of a reminder. Got the opening range, typically, and I've got the IB. But I try to stay off that chart. That's a chart, you know, if you're on too long. If you're getting in trouble, you've been on that chart too long.
Hey, you think about like, if you have trouble second guessing your positions, you don't ever want to go to a small time frame chart.
That's exactly right.
Because it'll make you second guess everything.
No, but yeah, it will. And notice this, like, so I flipped back over on our 15-minute. What I'm seeing is like, I mean, ES is below the VPOC, so the volume point of control, it's trying to push. But we only have 8 minutes, and NASDAQ is not. So for NAR to have a little bit more support, see if we can get a push through that VPOC level.
I just got my half scale there at 25,610 from 29.
There you
We're
go.
in good shape now. Let's see if we can yank it below 25,600 into the close. And I'm protected. No blood trade, no matter what. I mean, this thing can go 40 points in my face right now, and I'll lose a
Yeah. One Texas. I get what you're saying. Nice. And now our job is just tomorrow morning. You shouldn't be remembering today.
I love what he said there.
Yes.
Sorry, I'm watching this trade at the same time, but I love what he said there.
Yes.
That's what I was kind of mentioning earlier. Here I am taking a trade, but I feel better about it here. But I didn't get chopped the last, or fight the trend the last 3 hours. Come on, get 600 for us. Come on.
So you guys can see a NAR pretty much scaled right there, right around VPOC. I mean, big reason. I mean, that's a key source of liquidity in there. With that being the high volume node of the day, it's like that is a scale area, not an entry area. So for this to kind of get further down, let ES kind of push down here and see if you can get a little follow through and kind of break that ascending wedge. And maybe you can get a scale down into the 520, maybe get something down around 510 to 530. But don't be trying to enter at a volume point of control.
I'm watching ES is about to hit VWAP as well. There it goes. I got my fill at 600. That was whoever did that, Big Phil. Thank you.
You're welcome.
You just was that you that threw 71 lot there on the ask on NQ? Because that was very fortunate timing.
Come on.
That's some size filling right there is what that is.
Yep.
Yeah.
I just got a scale at 98.
When I want 60s, I got a pivot point at 567.
I'm going to be down to about
5-minute flip over, don't bounce.
Let's say we can get like 585. I'll probably flatten up.
You're on or below for yes.
Yep.
I'll go break even stop here.
So it sounds like we're trading with the kids are trading with us, or are they trading with us, or are they trading us?
Yeah, you know what? I didn't ask. I should. Long or short. We used to actually on Spaces we had a dirty diaper indicator. Any trader had a child with a dirty diaper. The market usually dumped. I don't know what there was a strong correlation.
Nice, I like that.
Yeah, trading during COVID with a newborn and a 7-year-old at home or a 6-year-old at home got really interesting. So my husband and I used to, say funny things like that too. We got a spinner once, and so we were just going to put stocks on it and have them spin in the morning, and whatever stock there was, that was the one we were going to then spin another spinner and
long or short.
Long or short.
But it's funny. My boys were younger, around well, I mean, probably further back than that. But I remember when Jim Cramer would be on. Every time I'd hear about a certain stock he's pumping, I'd say sold. So it'd get to the point where my boys are like, "Did you sell them again, Dad? Did you sell them again?" And then they come in. All of a sudden, they start copying like around the floor, like sold.
I love it. That's hilarious.
All right, 3 minutes here until the close. Stick around if you're in the audience.
Short. I can't believe I didn't take my own short.
Yeah. If you're in the audience, stick around. We have Vanquish coming on. I know a lot of you guys have been interested in the first options prop firm. I'm super interested in this as well. Honestly, I may be selfish on this demo the entire time, asking questions, checking it out. But sure you stick around after the close here in just a few minutes.
New options platform?
Yeah, it's Vanquish. I'll get some links out in the chat. There's one in the chat, but I'll get it another one and pin it here shortly after this trade. But we have, they're the first options prop firm. They've got multiple different versions of their accounts and stuff. We're gonna go over all of that here just a little bit after the close. Come on, pull it one more time for me. Oh, IWM's making a new low of day. There we go. There you go. Come on, SPY. I would short the strongest asset of the day. That's usually how it works, right?
Yeah, this looks interesting, Vanquish.
But I know a lot of our audience, a lot of options traders in the audience. You can learn from everyone, obviously, but I know a lot of you guys, we talked about it last week. You guys were looking forward to this, so excited to have them coming on here shortly.
We used to trade up until about 10 months to a year ago. We used to trade a ton of options. Both on the SPX or the SPYs and a ton of equity options. I mean, it was to the point where our futures business, with us in Legirity, it's like, Nara, Smooth, what do you think? Probably 60% of our trades were futures and the other 40% was probably options, or maybe the inverse. I don't know.
Yeah, it used to be.
I mean, we traded a ton of them.
Oh,
I just flattened up the last third I had there, a quarter for 20 points on the last quarter. Calling it a day there. Failure to break down to the 85 where I wanted to flatten, but nice little 20, 30 points as a whole. I'll take that all day for a nice.
Wait, IWM is going off of a cliff right now.
It is. It's falling apart. Should have been trading the RTY.
Well,
I do trade it every now and again, not a whole lot, but I do like to trade RTY also.
I'm still sitting in here. I'm just trying to
There
get this
it
like
goes.
last little flash down.
Mm-hmm.
Come on. There was our closing bell. All right, see if I can get a flash down. I'll get out of this trade if we can get down into the 80s maybe. Otherwise, I'll just let it.
Yeah, 85 was
drop
the
through.
area that I was looking at there, but
Yeah, I just moved up to 87.
we're so close to the bell, and comes a point where it's like, all right, what am I playing for? A last second order here?
10 extra points or so.
Silly.
Yeah,
I
I do
might
have
as well.
symmetrical support at that 25,590. So it was a previous swing that we had on the way up today on this, this swing that we just came up on NQ. So that's what we're bouncing from right now. It's 25,590. But we could fail right around that 600 area.
Got some earnings coming out right now as well. May get the last flash down here if we get a little volatility. CrowdStrike, Marvell should be out in the next few minutes. That's the only reason I'm kind of staying in this. I've got my stop break even, so I can stay there. J Money, you were quiet today. What do you think about our new coach? First off, let's get that out of the way. No, I'm messing with you. But yeah, any final thoughts from the crew here? J Money, if you want to jump in, rotation back and forth today. Stay out of trouble. Wait for it to break one side or the other.
Yeah, like we were talking about earlier, higher time frame, you've got to zoom out and look, and it's we had a huge trend week, and now we've started to build time and volume above 6,800. So until 6,800 fails and is offered on a back test, you got to stay with the trend and expect some continuation. Obviously 6,850 and these 6,860s we've talked about today are the ceiling, and we have to clear that in order to trigger that continuation. But this is a continuation base. It's a bullish base at the top of a trend, and until it fails, you continue to try to buy dips at the bottom. We talked about this morning, it was valid to try to get a short at the top of the range, but higher time frame, when you zoom out, this base does kind of favor continuation back into 6,900 as long as 6,800 fails or holds.
And especially with the close that we're having here, with this close, staying at the upper part of the profile, upper part from the move from last Tuesday. So, work the upper part of that profile, and we're closing here, right at VPOC.
Yeah, pretty impressive given the move you had last week, and you're able to, everyone expecting retracement this week, and if the retrace can't get underneath 6,800, you have to expect that we're going higher, considering what we did last week. And to be able to hold a base like this at the highs after that is pretty impressive strength.
Yeah, couldn't agree more. It's still a very wait and see. I would like to see a pullback to feel better about taking some more shots long, but I'm not going to fight this uptrend and this. There's obviously a bid under this market. So, all right. Appreciate J Money, Tammy. Appreciate you, Gav, Smooth, Nara, the whole Futures crew. Make sure you follow all these guys. I can get their actually go to Wolf Trading X Post. It's out. It's got all of us listed right there. Make sure you follow everyone that's been on the show. Shout out to Clear Edge. Automation stuff. I think we've got some live examples coming up the next 2 days for that. But we are going to rotate over and talk with Trevor from Vanquish. So big shout out to the Futures crew. Appreciate all you guys coming on every Tuesday afternoon. Smooth, Tammy.
Check you
Tammy,
guys.
you're ahead on the show.
Thank you.
Appreciate it.
Always appreciate you guys coming.
Yep.
All right, I'm going to bring on Trevor here from Vanquish. And boy, everyone is fired up for this. Let me get him. He is backstage here, and boom, there we go. What is up, Trevor? Let me get this screen turned off here.
Awesome.
Boom. Oh, let me get myself turned on. You're looking at Goff.
Yeah.
Let me get myself turned back on.
I'm trying to turn myself off, okay?
No, you're all good. I was trying to,
By the way,
trying to see the.
I just looked up your site. I'm looking forward to hearing about this. This sounds really interesting. All right, how the hell do I leave here? All right, see you guys.
You're all
Take care,
good.
Gov. And yeah, if you're in the audience, stick around. I know a lot of you guys have been waiting on this. Trevor, our audience is fired up. The First Options prop firm. I would love to hear just kind of a background of yourself and Vanquish kind of as a whole, how you guys got started, how you got into the industry, a little deep dive into you, and then we'll jump into the platform a little bit deeper. Yeah,
without a doubt. So I started getting into trading honestly very early in life. I got into crypto in 2011. At the time, I was maybe 13 years old. So playing video games, got into it from selling in-game items. And then from there, sort of got obsessed with getting into writing trading algorithms. From there, I actually had internships with a few hedge funds and then ended up working at a hedge fund. So I was doing work with multiple quant firms where I was on either a quantitative researcher role or an AI-based role around 2016, 2019, 2020. I was working for Synctive Capital as a quantitative researcher on a long-short options equities desk. And then after that, I was sort of taking my own team where we would run around and build our own trading algorithms, almost as like a garage band type fund, whereas me and 3 other guys, we ended up doing market making work with Binance on their institutional side of things. And after that, I sort of got introduced to the startup space, working for a startup that was trying to build a retail options brokerage that was integrated with Reddit and X and other social platforms. And around that time, I sort of saw, well, we always saw working in an institutional options sector, we always saw how active retail was in options trading. They make up the numbers are pretty ridiculous. It's about 40 to 60% of all daily volume comes from retail flow in options trading, which is absolutely massive compared to futures, equities, etc. So I want to say it was around 2020, late 2022, 2023. Me and a few guys, we saw all these prop firms growing like absolute crazy. Futures industry was booming. Forex industry, although not big in the States, was also booming. And we sort of sat down and we all had a background in, trading options or building options risk models or options algorithms. And we said, why has no one done this for options? We haven't found anyone who did it for options. We took about what would be 9 months to a year finding back-end software providers, building out risk models, building out the systems to manage account creation, resets, how the subscription system works, how to identify passing, failing evaluations, what leads to a payout, how do we set up our rules in that manner. And then after about 9-ish months of developing all that, we went live last October. So we've been around for just over a year now. And since then, we've seen interest pick up like crazy. Our user base has been growing. To date, a lot of people ask, we've had 0 denied payouts. We've never had to change rules. We've never had to do anything to adjust our plans or rules, which is a common worry within the prop firm space where everyone gets surprised.
I love that you addressed that on the front end. I absolutely love that you came in and addressed that. That is great to hear.
Yeah, that's a big thing we were thinking about when we started this, because as a business, we don't want to change our model ever. That only makes our life more difficult, and it makes, dealing with traders or users on our platform more difficult. You don't want people frustrated. You don't want to send out a surprise email, hey, things changed today. Hey, this rule changed today. So we modeled everything in a way that doesn't need to happen. We've never had to do it. And on that note, 0 denied payouts, 0 issues along those lines. And we've been able to grow very well ever since then. So that's sort of the background into how we got to where we are today.
Yeah, so I think it's super interesting, and it was as the futures prop firms really kind of popped up everywhere, they got more and more popular as a lot of people went to them. But the main question that I heard over and over was, why is there not an options prop firm anywhere? How challenging was it to get everything sorted out, and how different is it from the other futures prop firms that everyone, not everyone, but a lot of our audience are familiar with?
Yeah. So I would
I mean,
say
obviously the
from,
trading's differently, right? So I mean, the trade outside
yeah.
of the trading.
So outside of the trading, just, I mean, honestly, building it as a prop firm is definitely more difficult. I mean, we all see it. A new futures prop firm pops up every single day at this rate. Everyone could build one, snap their fingers. Everything's pre-built for it. The roadmap's out there. No one really did this before, so we had to take on the whole R&D side of it of, how do we build it? How do we manage risk? How do we grow it? How are we sustainable with larger user numbers or whatever it may be? And the other big thing is, since options aren't a delta neutral product like futures, you run into, I wouldn't necessarily say like outlier issues, but within modeling it, it's not like you deal with a lot more volatility factors, or in some instances, theta decay factors, or other things that can vary price movement, which, leads to users either having higher success with us. Our average payout tends to be rather high, around the $5,000 mark at this point, which is a pro of trading options as well. If you're trading a volatile market and, contracts are expanding like crazy, then you're going to make more money than you would in, let's say, trading futures. So that was honestly one of the more difficult parts to work with, sort of figuring all of that out. Now I'll add, you can also trade equities on our plans. So, you can trade equities and options at the same exact time.
That was my next question. I was like, okay, are futures included at all? No futures?
We have nothing with futures at this time.
Okay.
We've had a lot of requests for it, but as a company, our goal is, we're doing options right now. We're going to focus on our core product and core offer to our traders, and, don't put too much on the plate before it's done.
Well, that makes perfect sense. It seems like something that you could probably easily add, but the opportunity is in the options market. You mentioned the numbers earlier. I've polled our audience here, and it's at least 65+% that trade options. And there's some crossover that trade options and futures, but it's way more options traders than even the futures traders, even with the popularity of prop firms these days. I'm excited to dive into this. I have my screen pulled up right here. Just so I went to the website. There's a link. It's right there on your screen. It's pinned in the YouTube chat. It's also in the X chat if you guys are over there. Go in, click in. You can follow along with us a little bit here, or save it, bookmark it for later. So make sure you check this out. vanquishtrader.co/wolf takes you right there. I want to dive in though. So you mentioned stock options. You mentioned, I guess, take me through the beginning parts here. When can I trade? What can I trade? How does the trading work? Is it every ticker possible? What all is available to me?
Yeah. So right now, the plan design is for users who are trading mostly indexes, ETF products, or the major blue chip stocks. So, sorry. So on our platform, you'll see the vast majority of tickers. You're not going to see penny stocks or anything that is sub 20 mil market cap. Truth is, in a simulated environment, there are just issues with managing risk on things that hypothetically have 50 shares that you could short, but on a simulator, you cannot simulate that accurately. So any major stock or any major index we do offer. We go through your market data agreements. You'll see SIBO, Oprah, some NASDAQ, and then so on and so forth. Once you go in, you can trade any strike, any expiration. Really, the world's your oyster with stock trading. We allow 1 to 4 margin as well. So if your account has $100,000 in buying power, you have $400,000 in stock or equity buying power. This is good for users who are either hedging out positions, or maybe they want to trade higher leverage on stocks instead of trading options and having to worry about that. So regarding the rules with trading, though, right now it's just day trading. All positions have to be closed by 3:59 EST. If they're not closed, you'll just get auto liquidated. A lot of people worried, will I get disabled? Will it fail me, etc. You'll just get auto liquidated at market close. We don't allow any swing trading at this time or overnight positions. And then even to dive into rules more, so we have two plans right now for options trading. We have our basic plan and then the advanced plan. So the basic plan is really for users who are either more fast-paced traders or they're doing a lot of scalping. You could pass it in a day, and not only could you pass it in a day, but you can also get a payout the same exact day that you pass it.
Pause. You can pass and get a payout on the first day?
On the first day.
That is incredible. I'm so sorry. That was worth a pause. I feel like that is a huge thing for a lot of traders. I wanted to make sure we highlighted that comment. That's fantastic.
Yeah.
You can pass an account. If you're just a hot hand, pass the account and keep going. What is there? Well, I'll let you continue because I'm sure you'll hit on consistency and stuff like that as well. But a payout the same day you pass is actually incredible.
Yeah. So while you can do that, I mean, of course, not everyone is going to pass.
Results
and
are
get a
not
payout
common.
the same day. But it does happen. We do see it. So for the basic plan, you have to hit a profit target of 10% of your starting balance. So, if you're on a 10K plan, that's $1,000. A 100K plan, that'll be $10,000. And then drawdown, you have 5% drawdown. Now the basic plan is intraday trailing, which does make it more difficult. Intraday trailing essentially means for every unrealized gain you have, your loss limit will trail 1-to-1 with your unrealized gain. And then you need to make a minimum of 10 trades. That is a minimum. You could take 100 trades, 200 trades. 10 is just the minimum. And then the way the consistency rule works on this is it's per trade. So you need to make a 30% consistency, which would be your best trade divided by your total profits equals your consistency. So let's say
that's pretty standard. That makes perfect sense. So if you make 3,000 one day, on one trade you make 3,000, you need 10,000 total to balance that out to get 30%. Pretty easy numbers.
Yeah, and if within 10 trades, we typically don't see much issue there. So that's the basic plan. Now, I'll also note the basic plan is only able to go long calls or long puts. And that's because of the per trade consistency. So we can only track the individual legs of a long call, long put. But that plan's designed for faster traders, guys who are scalping. Typically we see people who are trading SPY, SPX, the Qs, Tesla, and they're just taking quick intraday trades. The stock plan is absolutely identical. It is the same exact rules, just a smaller profit target. So the profit target is 6%, and the drawdown is 3%, but the rules are exactly the same.
Can I ask a question on the stocks one?
Yeah.
So you mentioned, are there leverage tickers available to trade? So like the 2x leverage, Tesla or Nvidia?
Yes, there's some of the basket of leverage tickers or leverage indexes or ETFs are available, not all of them. We do plan to roll more out as interest has been peaking on that. I guess, I don't know if you remember, but everyone used to trade JNUG or the triple leveraged gold miners.
Yeah, the junior miners.
Yeah. So we've had people who are reaching out to us lately because gold's going totally nuts. So they're like, oh, will you add JNUG or will you add some of these leveraged gold miners or anything along those lines? So we're looking into adding that.
I'm going to pause you one more time because I keep calling you Trevor because it says Trevor on my screen and I've gotten 3 Jakes in the chat. So There's an inside joke I'm missing. Maybe I need to join the Discord. Apparently, I think some of your guys are coming over. But Jake, Trevor, would you tell me which one? We'll stick with it.
Yeah, so my name is Trevor. I don't know how it happened, but everyone in the Discord started calling me Jake. Because the Discord handle is just Vanquish. So we have like Vanquish support, etc. One day everyone just started calling me Jake, so we sort of all just went along with it, and we're like, it's pretty funny.
That's hilarious. I knew it had to be an inside joke, some type of story like that. It's great. I was just sitting, I was freaking out because I was like, did I say the wrong name like 3 times already? I could have, like, I know how to read. I see Trevor on the screen. I thought maybe I messed up. Sorry, I had to clarify that, but I'm a very open talker, so I appreciate Jake, Trevor, JT. We call you JT maybe at some point.
No,
all right, sorry. Back to the stock plan here. So this is if I enter in a stock trade. Let's easy one. Let's say I take Tesla because Tesla loves to run, intraday. I take Tesla. I can put up to how much of this? If I have the 10K is what I have pulled up here, so I could put 5K, half of my buying power in there. Is all of my buying power? Does it matter? I mean, obviously, if you put it all in there, you take a loss pretty quickly. But
yeah, you can. We have no restrictions on contract size or share sizes. Now, I wouldn't recommend doing your whole entire account. But with stocks, you have 1 to 4 margin. So if you have a 10K account, you could buy 40K worth of Tesla right out the gate. You are probably going to take drawdown extremely fast, but our whole idea is we wanted our plans to be designed to be as close to opening up, your brokerage account on your phone or on your desktop or laptop or whatever it may be. So we wanted to design it without restricting users based off of contract sizing or notional limits on their trading, anything along those lines. So yeah.
Awesome. I love that. So the stocks one we talked about, it's just straight up stocks. Maybe there's some leverage ones available, maybe some more coming. Shout out to we have a lot of friends in the leverage ETF space we talk to quite often. So it's always interesting to me, especially if you're day trading. Because a lot of people, the whole thing that prop firms provide a lot of traders, underfunded traders, right? And so it gives the ability, a lot of people do trade options because they don't have enough buying power to make it worth their while, at least in their mind, to just trade equity. So I love that you have this as an option as well there. And then we talked about the options. This is long calls, long puts, pretty straightforward. You mentioned the advanced options a little bit. I don't know if you want me to drift you over there a little bit, but the way you're leading makes me think that I can maybe sell some iron condors, maybe do some call spreads, put spreads, some things like that.
Yeah. So we released the advanced options plan around May. When we first started as a company, we only had the basic stock, basic options plan. Within probably a month of accepting traders, we had a ton of requests for guys who wanted to trade level 4 options permissions. We, at the gate, we would test for things like this, but, once you have traders in, there's tons of testing you have to do to make sure everything works. It took us probably 4-ish months to really figure out how are we going to model users who can trade. You can just sell naked premium if you'd like in this instance. So you could sell calls, you could sell puts. It's going to act as a cash secured put or a cash secured call, but all level 4 options permissions are granted. To do this, the rules are rather similar to the basic plan, but you get end of day drawdown, which is, in my opinion, the preferred form of drawdown. It does not adjust until end of day. You still have a loss limit throughout the day, but I guess the best way to explain it is if you start with a 100K balance and your loss limit is $95,000, you finish the day with 102,000. The next day, your loss limit will trail up that $2,000 that you made to 97 grand. So you don't need to worry about the intraday fluctuations as long as you're above your loss limit. You don't need to worry about intraday drawdown trailing up with your account. So it gives you a bit more breathing room throughout the day to either let positions run or maybe grow your balance throughout the day. The profit target is still the same, 10%. Your drawdown is still 5%, same as the basic options plan. But instead of a per trade consistency, you'll have a daily consistency. So the formula for this is, your best trading day divided by total profits equals your consistency. Sort of like what you were saying previously, if you make 3K divided by 10,000, you hit 30%.
Yeah,
So-
I think a lot of people, anybody that's traded the futures prop firms this is pretty consistent with what a lot of them do. And that end of day, I couldn't agree with you more. For my trading style, that's my preferred is, I don't want to worry about like if I'm up big on a position and it happens to come back against me or something. I'd rather, end of day, square off in the morning, square off at the evening. And it's less for me to think about when I'm actually trying to execute trades. So I really like that end of day. 4 days minimum to qualify for payout. Is that what I'm seeing here?
So that's 4 days to pass, and then 4 days.
4 days to pass. Okay.
For payout, but truthfully, it's 4 because that's how you're going to hit your 30% daily consistency. Like that, if that checks out math wise.
I was gonna say I'm doing some math in my head here. I'm pretty decent at math. I don't think you can hit a 30% consistency on less than on 3 days or less, right?
Yeah, so
that's pretty funny.
So that's how we did the 4. It just gives people a nice number to run off of. And then again, it's 4 trading days. It doesn't need to be profitable days or anything like that. You could trade for 100 days before you pass.
That's an important point for prop firm traders. You don't, just because it says minimum days, that doesn't mean you have to start swinging for the fences, right? It's not bases loaded, bottom of the ninth here. Like, let's, build up your base hits. You can skip a day. You can do it in 8 days, 10 days, 100 days. Doesn't matter. That's a really good educational point for trading prop firms right there as well. On these, Trevor, Jake, I've told Jake, Little Beaver, I think, was actually thrown in the chat here too. I think I'm going to leave that one out. But Trevor, when we talk about these plans here, is there anything else on the plan side of things and these different, the stocks, the options, the advanced options, the different levels here? I'm assuming this is a monthly subscription fee. Is there an activation fee for funded after that or anything?
No, so it's a monthly subscription. You can cancel your subscription at any moment. If you cancel before the end of the month, you could still reset or trade on it. It only officially cancels upon the rebilling date. There's no activation fee, but your subscription carries. And the reason we have it set up that way is because we do 100% profit split with our traders. So you'll see a lot of prop firms do 70-30, 80-20, 90-10. With us, you keep 100% of your profits. If you make 1,000, you request 1,000, you keep the whole $1,000.
Second pause. 100% profit share. I mean, everyone that I've dealt with, they do some type of. I mean, maybe the first 5,000 they give you 100%, and then after that it's 90-10, 80-20, like you were saying there. You guys are giving out full profit.
Yep. So
that was worth the second pause, Trevor. That's huge. That is huge.
Yeah. So this ties into sort of what I was saying earlier about how we want, when a user comes in, we don't want to add a bunch of hurdles. We don't want to, you make 5,000, you keep this. Anything above that, it's less. Anything above that, it doesn't make sense to have your users jump through 10 different hoops to get the money out that they earned. So since these are simulated prop firm accounts, we allow users to keep 100% of their profits. That's, how we modeled it. That's how we designed, and that's how we've maintained it for our whole user base here. And yeah, it's been great for us ever since. We try to keep the rules as streamlined as possible, make everyone's life easier in understanding it and being able to apply what they read to partaking in evaluation performance account systems.
That's massive. It's absolutely massive. From a trader myself, from a guy that talks with and hangs around traders all the time, that is probably the most basic request that most of us have in the prop space is just Quit making it so complicated. Quit changing things, moving the goalposts all the time. Just make it straightforward. Put it where it needs to be, and I can get accustomed to that, and I don't have to just shift and think about so many things. Trading can be hard enough as it is, and I love the simplistic approach that you guys have. All right. Anything else to hit on this? Because I want to make sure we talk about what the platform looks like and the actual trading and any of that. And if you want to share a screen at any point, let me know. Go ahead and you can hit that right next to the camera button. Hit that little screen share right there, and we can put your screen up here as well, because I'm excited. And I know this question. I got this question about 5 times over the last week. I have this question. I see it in the chat here again. What are we actually trading on? Where are we executing? What does it look like? Here comes your screen right here. Drop mine down. Boom. Tell me about the actual trading platform that we're working with here.
Yeah, so here we have a DX Trade, specifically their newer product, DX Trade XT. This is, I may have it a little scrunched here just because I've been playing around with it throughout the day. I always play around with it, try to, help users or take notes for things or build out, other directions or help center items for it. It's very similar to, let's say, like a Thinkorswim type of platform, where you can set up your charts right here. You won't see much, but this is your positions window where it would say the instrument, what side you're on, quantity, fill price, so on and so forth. I have an options chain pulled up here. You could search all of your major tickers, pull up the options. You have your full options chain. You can select by date, open it, you can adjust.
So and this is like pretty much anything's available. So it's not like only weekly strikes or only monthly strikes or quarterly or anything like that. Like this is all available?
Yeah. So it's exactly what you would see in your traditional brokerage account. And we want to keep it as close to what you would see in your traditional brokerage account as well. So even if I stretch out the amount of strikes you could see, we can show all strikes available. We can go all the way down, or in this instance, let's open one up. You can see.
Since it's day trading, I mean, you probably don't want to go out too far since it's day trading, but I get it. I love that it's got everything.
Yeah.
A lot of the challenges that people always talked about with an options prop firm was like, how do you get all the data and how do you get all the chains in there and all that stuff? You guys have figured out a great way to do that.
Yeah, no, thank you. And honestly, that was honestly one of the more difficult parts. You're not dealing with, in a futures contract, you're trading that month's contract of ES or NQ or GC or, whatever futures contract it may be. In this instance, you're dealing with hundreds, if not thousands of strikes, expirations, different spreads you're trading. So, for example, if you want to open tons of our guys trade, iron condors or condors, it'll pre-fill all the strikes for you. If we scroll to mid here, you can see pre-filled strikes for an iron condor. If you want to hit it, you want to buy it, ask, it'll fill it in here, fill in all the information for you. You can adjust your quantities for legs, increase it, lower it, so on and so forth. And then, if the market was open, you'd be able to confirm this position, send it out, then see it in your positions box. So it's fairly straightforward. You don't need to go around piecing together all of your legs for different options contracts or trying to build spreads. It does most of the legwork for building them out for you.
I love that. It's really, this is like this platform. So this is called DX Trader, right?
Yeah, DX Trade. This one specifically is DX Trade XT. Yeah.
Okay, so a couple follow-up questions here. This looks almost like a toss mixed with like a Weeble mixed with like a Tradify, almost all in one. Maybe throw it. There's some crypto DEX trading platforms that look kind of similar to this as well. It seems very intuitive with all of those pieces. Is this web-based? Can you download it on desktop? What about mobile? I mean, I got to throw all these questions at you at once, Trevor.
Yeah, no. So this is a web-based browser platform that I'm showing right now. We do have an iOS and an Android app, but what I'm demonstrating right now, this is web-based. So, you'd access it through. You could access it through our dashboard or on our website. There will be an option as you scroll down, or if you're on the dashboard, it'll just say trade. and select that there. It'll open it up for you. And then, like what you were saying, for it being similar to like Thinkorswim, has most, if not all, the same features as Thinkorswim does. So if you want to add widgets, you have everything that you would see there. You could build your watch lists, personal indices, you can name them, time and sales, you could set custom alerts, you can open up risk profiles for, let's say we want to open up a risk profile on SPX, or, we would have to select an option as the market's open, but you would get a full risk profile on the contract you are looking to trade, the spread you are looking to trade. You can set up your own trading journal. I don't think many of our users know we actually have this feature, but you can set up a full trading journal and add to it at the instrument's date and time, fill out your information on it. Was it a market event? Did you make an error? Was it impulsive, a news trade? Set your own tags and evaluate it. So it's pretty in-depth on what you can do here. And especially guys who have like performance accounts, they really want to track everything they do, or they've had their accounts for a few weeks to months. They can get all of their history in here. It'll show your previous history, canceled ordered, filled orders, trades you've taken, populate it into a journal and sort of fill out all that information as you please to read it.
All right, one thing I just did real fast, I dropped a link to your Discord in the YouTube chat. I can drop it over in the X chat as well, so everybody can go chat with Jake. He's Trevor over here, he's Jake over there. No, but I wanted to give everyone, because I know how much interest there is in this. So I want to make sure everyone gets all connected where they need to be connected there. So there's a Discord right there in the YouTube chat. Question here I see quickly in the crowd, 0DTE is available and fine?
Yeah, we allow 0DT. We allow everything you would get in your normal brokerage. So, truthfully, most of our users are trading 0-day SPX or SPY or Tesla, any of the majors. It's fully allowed. We have no restrictions on that.
All right, and then the mobile, I wanted to, because I saw on the website, and once again, that link's pinned in the chat for everyone to go in and check out all this stuff and check out the plans, all this. But I saw iOS and Android both. You have a mobile app. So, because that's one concern that I have is, and I think about this, is like, okay, if I'm in a trade, if I'm trading and I get pulled away, I have 3 small kids, you never know what happens. Every once in a while I get pulled out, hey, I'm in a trade. I want to stay in the trade, but I need to leave and go to the bank, run an errand or something like that. You have a mobile app that you can access this on.
Yes. So we do have iOS mobile app, Android mobile app. I personally believe the mobile apps are a bit more user-friendly for a beginner user. They kind of like what you said, they're very Webull-esque. The mobile app specifically is a very Webull-esque. So usually when we have guys who come to us or they come to support and we have to recommend them somewhere, they say, hey, I'm new to trading. We sort of suggest, hey, we have some videos either pinned in our Discord or pinned in our help center to walk you through how to use the platforms. And typically the mobile app is a bit more beginner friendly, in my opinion.
I just joined the Discord myself, so I'm in. I'm ready for this. I'm in. All right. Platform-wise, any other highlights? Any other things that you want to hit on here? I'm looking up top. I can see there's an account up there. There's balance, equity. Probably fairly easy to track where the okay, there it is. Perfect. I can see. Okay. Profit and loss, unrealized day, all that good stuff. Does it have like a drawdown or anything, max loss limit?
So we are actually working on an update right now where in the coming weeks, it will in the live time show you your loss limit at all times up here. So currently that's displayed in the dashboard. So if users go to their Vanquish dashboard, they could see it in the live time, but we're working on an update. So you'll always see it here, which I think is going to be a huge help to most users.
I'm loving every bit of this. I was looking forward to this. I know last week a lot of people were headed out for the weekend anyway, so I'm glad we pushed it. We got a better crowd here today with with the holiday coming and stuff. I was actually on the way out too. I was like, okay, as soon as this is over, I got to run and grab my ham to start getting ready. But I'm soaking in so much information here. I love this whole thing. Of course, since it's live streamed, you can go back and watch it if you've missed any of it. Guys, if you have any questions in the chat, please drop them in there now. I see one here that I want to make sure we hit on. Do you offer / have on the main chart buy sell AI triggers? I'm not sure what AI triggers you're talking about, but I see the chart here within the program. I'm assuming that there's a decent amount. What do indicators and other stuff look like as far as the charting side of stuff goes? Looks pretty similar to you do.
Yes, so we don't have any AI triggers or anything along those lines, but think of the basic indicators you'd have with Thinkorswim or, let's say a free TradingView account that you're not using outside indicators from. It's all very similar. So you can go to let me pull it here. You have, your basic indicators that you could pull. You can add them. I'm not adding them right now because market's closed. It's not going to populate everything. But you have all the majority of your basic indicators: linear regression, historical volatility, moving averages, so on and so forth, pivot points, or if people are using,
Well, it's this is basically all inclusive. Like this is,
so it has most, if not all, features your average user would use outside of custom made indicators. And then, if you're someone who is drawing, any form of TA or using lines, you have all that covered here. You can put text on the chart, or, you could mark up your chart however much you'd like if you really want to. You could add all your lines, Fibonacci's if you'd like, so on and so forth. GAN fans, GAN boxes, price ranges, date ranges. And then as you build this, a lot of people ask, you could save your layouts. We go right here. You can custom save your layouts, name them as you please. So when you come back the next day, or if you
multi-charts.
Yes, we do have multi-charts.
I love that. I didn't mean to cut you off there. I apologize for that. But I was as you're saying layout, my ADHD brain over here, I started thinking, okay, wait, I can set up multi-charts, I can set up all this, and I can just save the layout. Every time I come back, it's just boom, right there. My TA is still right there. That is fantastic. It's incredible.
Yeah, and if you're someone who uses multiple monitors, you can open widgets in your separate window. So, you could have multi-chart on one window of your computer, and then on the other window, you could have your options chain, positions tab, so on and so forth. I really think the best comparison is it's similar to your Thinkorswim styled platform.
Yeah, it looks, I've used Thinkorswim in the past a lot, and it looks very, very similar, honestly. As I said, it's kind of a hybrid between like Thinkorswim, probably more than any of them. Kind of has a little bit of a Tradify look for the prop firm futures traders, and then a little bit of a Webull. But I love that it's kind of all in one place. Like I don't have to, go to a different tab to find the options. Or I guess you could set that up within the layout, but being able to get to the options chain and have the chart there and the different things. Can you execute on the chart itself? Does it pops up your position on there, or so with options trading being a little bit different than futures trading, a lot of people will actually look at the options contract chart itself, right? If it's the SPY 680 call for whenever, you can actually look at the price of that chart, and people will trade, long, short, whatever they'll enter, and they can put stop losses and stuff on the actual chart. Do you guys have that?
Yeah. So if you go to these windows here, now the market's closed, but you could set up your bracket orders, sort of like I'm demonstrating here. You can drag them up and down as well. So very similar to people love that with TradingView. That's a very popular thing we see with users, or honestly traders in general who use TradingView. They love to use the drag and drop. And then you could set it to a stop market, limit market, and then market is not open right now, but we would be able to group this as an OCO order. You want to drag it down? I'm sorry, bear with me here.
You already thought of my next question. By the way, we're going to do another one of these soon with Trevor or the team during market hours, so we can see this in live action. But I couldn't wait any longer to bring you on to introduce you to the crowd. But half of this is selfish. I just want you to know. Half of this is I'm fired up about this, and I'm excited to learn about it, to check into it, and try it out for myself. But you already read my mind. Great traders maybe think alike. I'm not calling myself a great trader, but I'm just saying great minds think alike. We're trader minds. I was going to say this exactly. Okay, can I set a bracket order when I enter and set my risk and my take profit immediately, like as I enter? Or, hey, I entered, now I can go ahead and as you're showing right here, basically create a bracket order after the fact?
Yep. And so you can also do this on a per specific options contract trade. So you can pull up the chart for a let me see if I can demonstrate it, even though market's closed right now. But let's see if I can pull it up. So let's say I want to open a specific market's closed. 12.3.
So I could do like I could have a chart with SPY and a chart with the SPY whatever call option chart right beside, both charts side by side, kind of. So I can monitor price action and monitor my position and the movement of the contract.
Yep. So you'd be able to do
that's
both.
Massive. This is huge.
And then you can also, like I was showing, where you can right click, drag and drop your OCO brackets. You would be able to do it on your specific chart for the options contract as well. Now, that's pretty user beneficial in that case. I actually am reading some of these questions as they come in, if you don't mind.
I was going to start. Start highlighting one. Do you want to go in order? Which one do you want to hit first?
So the question about active trader, I see that. Do we have options active trader like TOS? We see this question all the time. We do not currently have it or something similar. People also ask similar to, I forgot what Weebles is called, but they have like a options DOM where you're able to do.
It looks like a DOM. I think it's a ladder or something is what they call it.
Yeah. At this time, we do not have it. There is something similar in the works right now that we're trying to get going, but at the moment, we do not have a feature like that.
A really good question, though. I like that question, and that for those that are maybe a little, it's basically like it looks like a DOM if you know futures. It looks like an order book, kind of a dynamic moving. That's what DOM stands for those that didn't know. Basically depth of market. It kind of shows you that stuff. That's really interesting. Let's hit some of these other questions, Trevor. I'll go back here. Is there an expiration date? We hit on this a little bit. There's not really a limit. I mean, I'm assuming you guys even have leaps on there. Probably not recommended if you're day trading because you can't swing, but you have that available.
So you can trade leaps, but since we only allow day trading on these plans, all positions will close out at end of day. So may not be ideal for your strategy if you're more of a swing trader or someone looking for multi-month movements on a position. But if you have some form of strategy where you're trading leaps intraday, you are fully able to. I'm just reading some of these questions as they come in here.
Yeah, no, there's some great questions too. All right. Is there a minimum number? You hit on this earlier. There's no activation fee, but basically you just keep paying the monthly subscription fee as you go, correct?
Yeah. So you don't need to do anything to keep your account active besides pay the subscription fee. I'll also note that if your account is canceled and it lapses the billing period, we have about a 3-day buffer where you can resubscribe and reactivate your account with its previous trading history, which a lot of users do because, sometimes you cancel your plan or something happens and you need to reactivate it and you don't want your history to go to waste. We store all that information to keep you going. But no activity requirements. The The monthly fee does stay in the funded stage, but I touched upon this earlier in the call. We have no activation fee, and you keep 100% of your profits. So that's why we keep the subscription fee ongoing. And then any changes once in the funded account, or do the rules remain the same? So in a basic options account, the only rule that drops is the minimum 10 trades. You no longer need to take 10. You just need to have 30% consistency, and the minimum payout request is $250. So as long as you meet those two, you can request a payout every single day, every 24 hours or day.
Quick follow-up question on that. So on the advanced options account, where the minimum number of days is 4, do you still have to hit the you take a payout and your consistency is going back into place 4 days minimum, because you got to hit the 30. So after I take a payout, then I have to hit 30% again, right?
Yeah. So on the advanced, it resets because of the daily metrics.
But on the regular options account, that's the one where it's intraday trailing, but it's just based on your biggest trade has to be.
Yeah.
I love the 2 options there.
Yeah. So the basic plan doesn't have a reset on the consistency, because it's just per trade. Yeah. There's nothing for us to really reset in that instance. So you can just keep going right after. You can get a payout, the amount's deducted from your balance, your payout's received, and then you can go right back to trading the next day, request a payout a day after. And we have users who do near daily payouts, or they'll go on, tangents of daily
just
payouts.
A streak. They're just streaking. They got a hot hand.
Yeah.
And so like you're in some, let's say you're in some trade, crazy news comes out, and you hit a huge options trade. Worst case scenario, all you got to do is just make some more and even back out that consistency, right? Even if it takes, it may take another few days, it may take 10 trades, it may take 100 trades, but all you're going to do is just keep going. It's not like you're not getting punished for making too much money, because your balance is still there.
Yeah, it's 100% correct. A lot of people who, when they're new to our evaluation system, they'll ask that, do I get disabled if my consistency is too high? It has zero impact on your account disable. If it's too high, you simply take more trades or more trading days, and with more trades or trading days, it will lower.
Let's talk about payouts a little bit more here. You described the process for doing it. How do you guys handle payouts? How do they get to the user's bank account or wherever? What are the options there? And of course, this question here, I see a response from one of your guys over here that there's no payout cap, but I wanted to put this question on the screen for sure. Is there a payout cap? We'll ask.
We have no payout cap. Yeah, the thing everyone likes to hear. We have no payout cap. And then a lot of people ask, what are our largest payouts? Our largest single payout to date is $16,500. We've had a user do shy of 20,000 in payouts on the same performance account in, I want to say it was 3 days. We have.
Could you take 2 payouts in the same day? In theory?
In theory, if you had 2 basic options accounts.
Yeah, like on the basic. Oh, okay, for separate. I was just thinking in one account, if I hit payout in the morning, I took a payout, and then I take 5 more trades that afternoon, and they all work out. Could I take another payout in theory?
Not in the same market hour session. So it'd be the next morning.
Hey, that's if that's the only little snag on this, that's not even a snag. We'll breeze by that one. But no payout caps. Nope. What's the payout, like requesting the payout through the dashboard, ACH wire?
So we use RiseWorks at the moment. We're working on implementing a few other options just out of, user requests, popularity, whatever it may be. With RiseWorks, you could do same day ACH. You could request a payout in crypto. We basically see everyone doing ACH. It's really up to their own preference disclosure. But we We approve payouts near instantly. We don't have a holding period or a review period or anything along those lines. The only, and I have no issue saying it, the only scenario we would ever see some form of review, and typically this is squashed well before it would even go for a review, is the 0.01% chance we run into someone who's micro scalping. But that's, for people who don't know, micro scalping is you essentially buy and sell a ticker to make a penny or to make the bid and ask, and you do it hundreds of times in a day. And it's we deem it as an exploit because it's not replicatable in a live market. We all wish it was, but you can't do this in futures.
I hope people realize that that's not real trading. Like it's not real trading at all. I completely agree with that rule of all of those. Rise, for just if no one in the audience, I mean, if somebody is, but if you're not familiar with Rise, I've personally used Rise for payouts. It's fantastic, super quick. It does give that crypto option, like Trevor mentioned there. I do ACH. It's easy. It's usually within a couple hours from my Rise account to already pending in my bank account by the end of the day. So Rise is fantastic. I love that you guys have that. There was another question I was going to ask you around the payout stuff.
Yep.
Oh, I know what I was going to ask. So you have like the challenge, like a challenge phase or whatever, evaluation phase. You pass that, you get funded. Is there a live account that you guys move people to, or do you stay basically in this sim environment?
Yeah, so we do have the ability to move people to live accounts. So that was actually one of the original ideas when we started this company. Essentially, our long-term goal is to treat the eval system as what we typically call like a farm team. Like, this is where you identify your players who you would move up the ranks. Unlike futures, the common formula you see with futures prop firms is after 3 payouts or after 50K in payouts or whatever it may be, they move you live. With options, we have to be a lot more bespoke about it. Truth is, users can go on hot streaks. If the fix is really high, they might be profitable, but when the fix is low, they're not profitable, or vice versa. So when we identify someone to move them live, we're looking for someone who has, their account has lasted for months on end. They're not churning through resets. They're not churning through PAs or anything it may be. And we don't punish people if they do that. But if we're looking for someone that we want to back with live capital, we want to see forms of longevity and consistency, or some form of strategy that we're able to pinpoint on our risk engine.
Yeah, that makes perfect sense. Here's another question. I've got more questions, and I know we're probably running short on time here. When you mentioned this a little bit earlier, but like swing trading, is that something you guys are working on developing? Is there a time horizon?
Yeah, so we probably revisit this question and plan. It must be every other week. And we've revisited this for this, since inception. We're always asked, when will swing trading be a thing? We have no defined time horizon on this at the moment. It is something we actively investigate. It's not something we put our foot down and say, no, we cannot, or no, we are not doing it. It is just, I guess here's the best way to explain it. We openly say this to our users. A lot of our demographic is think the Wall Street Bets, your trading earnings reports demographic. Containing the 9:30 a.m. market open disables on your account is now down 60% is a very large challenge, or vice versa. Your account is up 300%. Containing, user, I guess the word is like digestion of that information, or the ability to the spreads are all over the place when market opens like that. So they could be getting wicked up and down. How would we manage that with a drawdown system or risk system? That's the true hurdle that is difficult to find out or solve, but it is something we are actively investigating. Just no defined horizon or timeline.
Yeah, that part would be interesting. You mentioned the word reset in there. That's a big piece. Obviously, we know mistakes happen, as they say, when you're trading, and especially if you're you're learning to trade, or even if you're an experienced trader, mistakes do happen. How does the reset process work? Pricing wise, maybe in there as well. You said no limits on resets. I mean, obviously, nobody wants anybody to sit there and just run up a credit card bill resetting. Like, nobody, please don't do that. As much, Vanquish is a business, they would love that, I'm sure, but no, they don't, because it's all about, like he said, building a farm team of good traders. That's really the mission behind prop firms, and giving you the opportunity to become successful. So tell me about resets, Trevor.
Yeah, so with resets on the basic options plan, the reset price is slightly discounted. It's about 75% of the original plan purchase cost. And on the advanced options plan, it is 1-to-1 with your subscription cost. And that is due to, it being able to trade level 4 option strategies. If you have a solid strategy behind it, your win rate is going to be higher. You could be playing intraday, theta decay strategies or capturing volatility that you wouldn't be able to capture with just long options. I'll note we very frequently, and right now currently, we run a lot of promotions where users do get a free reset credit. So this is a great way for people to come in. They get a discounted account. The truth is, a lot of people on their first go, it may be difficult. They're learning the platform. We offer a free reset with that initial purchase. So that is something we always try to do. And then
the new users get a free reset. Is that?
Yeah. So with any
promotional make sure I heard that right correctly.
Now, or they use code WOLF. They can
code WOLF.
Yeah, code WOLF will get them a free reset credit upon purchase. To use it, because that's the next question. When you go to reset, you'll see an option that says use credit. Just select use credit, and it'll reset your account at no cost. We try to do things like that to keep everyone in the game. That's the reality of it.
Yeah, that's great. It seems like you guys really have traders' best interests in mind. We do have code WOLF. What right now, are you guys currently running any promotions? I saw somebody in the chat saying that you guys extended Black Friday. I just want to verify. I don't want to put out false information here, but it sounds like you guys have a Black Friday sale going on still.
Yep. So currently with code WOLF, you'll get 50% off and a free reset credit on any plan or multiple plans, whatever your heart desires. So yeah, that's been extended and can be used now.
50% off and a free reset credit using code WOLF.
Yep.
All right. I'm actually I'm gonna make a post about this on the Wolf Trading account here in just a little bit, guys. I'll put the link underneath and all that too. But what a great timing for this to happen. I mean, I know I was kind of thinking in my head, I was like, okay, well, Black Friday, Cyber Monday, did we miss out? Is there a Christmas sale that we can look forward to? You guys just took care of all that and said, no, we're going to take care of the people.
Yeah, no, that actually worked out really well. Because I think like we were discussing, I was out with family last week for Thanksgiving, and then luck of timing working out, everyone's back now. I'm back. And then, yeah, no, that's great.
Awesome. All right, we're a little bit over time. I don't know if you have to run here, but I do want to make sure and give you the opportunity. One, I did put that Discord link here in the chat. I just joined it. I'm in here. I'm going to check this out here in a little bit. I see a lot of good resources in here, and I'm sure there's a great chat. I see some of the people coming over here as well. So that's in the chat as well. Discord, if you go to Vanquish, the website, the link that's pinned, you can go to socials right here. You can follow them on X, formerly Twitter. I still struggle with that one. Discord, Instagram, all that good stuff. There's a Discord link there as well. Got that taken care of. We've gone through a lot of stuff here. Trevor, is there anything that we didn't cover that you want to make sure that we hit today? I could ask you questions about 10 more times, and I'm excited to have you back on soon so we can kind of see it in live action, but I'm glad we did this the way we did today.
I think we covered most off the top of my head items that come up. But again, I'm happy to be on as much as possible. Users are going to have questions or things are going to come up, or I'm always happy to answer, help everyone out there. Off the top of my head, though, I think we covered a lot of it. For anyone, watching, like you said, Ryan, our Discord is very active. We're very big on trying to keep an active community where people assist each other going through rules, assist each other using the platform, or just any general questions. That is where all that information lives. We have a full moderation team that assists people. And, it's a big goal of ours to try to build a community out there where everyone's being taken care of, people take care of each other, no one's lashing out. And we have guys who have been with us since the first month we've launched and still help people to this date or still trade with us to this date. And that's one of our big goals, to also build that out alongside, all of our offers for traders.
I love that, Trevor. I really appreciate your time coming on. I mean, I just got to say, my mind is blown right now. I looked into this some ahead of time, and I was already impressed. But going through the rules with you, I mean, look, if I was going to critique you guys as a prop firm, and I've been trading the prop firm space for quite a while, mostly obviously on the future side of things, but I mean, I don't know where I would even find a critique of this. And I'm not just saying that. This is my honest, just real-time reaction to all the information presented to me right now. This is fantastic. You guys have traders in mind. You've built this for traders. You've created the options that everyone's been asking for a long time, especially in our crowd of traders. So, gosh, what a great solution. I'm excited for this. And Trevor, looking forward to having you or someone else from the team. I want it to be you, Trevor, Jake. But I'm sure you got other great people too. But yeah, I'm looking forward to having you guys back on soon during market hours so we can kind of see it live in action. But what a great deep dive here. I really appreciate your time. If you're in the chat, click on the link and just go start checking it out. There's some great stuff in here. On the website, I see obviously the plans. I see the socials. There's support here. There's help center. There was some great resources. I don't know where I clicked a while ago. I think it was right here. Some great resources here for all the different stuff. We covered a lot of this on here, but you can go in and read even more. Who's Tom? Am I getting Tom back on? Do I get Tom next time? Is Tom his real name? What does he go by in Discord?
These are real people who help with support or writing help center articles. But no, I think I'm the only one who has two names.
Okay.
Yeah,
you're the only two namer. Well, you're special then. One last question. I like this. Is there a sim account? So if I sign up for an evaluation account, is there like a practice account or anything that I can kind of get comfortable with on the platform?
Yeah, this is something we're working on adding. We don't have it at the moment, but it's requested very often. So we are looking into how to add this for users. We are huge on taking feedback and sort of noting it for things to add. And this is a common one we see. And I also think it would just be beneficial for users to have a training ground to get comfortable.
Yeah, absolutely. I know when I first got into trading futures, I was using eval accounts, like practice accounts there for a little bit. It got a little expensive. So it was, like, okay, once you get it figured out, I don't need the demo anymore. Get that off my screen. But at first, I could see where that could be very helpful for traders here. Guys, go to the website. Check this out. Don't use code BFCM. Use code WOLF. That's the only thing that I'm going to say here. Use code WOLF. Of course, support us here, Wolf Trading. Support the channel. We appreciate everyone tuning in. Trevor, final words, final thoughts?
No, support Wolf. Use code WOLF at checkout. And, thank you for everything. Thank you for having me on. It's a pleasure. I really appreciate the opportunity here.
Absolutely. My man, we're going to have to send you some Wolf merch for sure.
Yeah, please.
All right. We will. We'll check into. I'll get with my man Sam and the team, and we'll see what's going on there. All right, everyone. Thanks for tuning in today. Make sure you like and subscribe to the channel. Been live pretty much all day. We had a little break in the middle of the day. Came back. We had the afternoon. Another great day of trading on Wolf Trading. That's weird to say. Trading on Wolf Trading. But great to have everyone on. Of course, tomorrow we'll be on Spaces in the morning. We'll be back here on stream in the afternoon. Thursday, we have morning and afternoon, and all day Friday. The full calendar, of course, you guys know, is on the Wolf Financial main page. It's also pinned on the Wolf Trading page there as well. Thanks for tuning in, everyone. I saw the question earlier said, is this recorded? This is absolutely recorded because this live stream is on YouTube. It's also on X. Both of those basically live in eternity. You can go to our YouTube channel right here, go back and watch this at any point. If you want to follow up on some maybe the questions, maybe if you missed part of it, go in there tonight. Take a look at it. Leave a little comment, a little like while you're there. Support the channel. All right. Appreciate everyone. We'll catch you guys tomorrow.